Okay, we're live. We're live. Let's do a quick check. Mic check for Steve and video check. Everything looking all right? Okay. Like it's okay on my end. Just give me a sec, guys. Just checking the setup here. We got the new. So with the challenges, the way we're going to do this, we'll get into the pre-market analysis here in just a second, guys. I still have COVID, but obviously we're rushing and pushing through regardless. But my wife is on the way to get some medicine, which would be nice. So that'll be sweet. I'm looking forward to that. It's going to be nice not to be tired anymore, but we're making good progress in spite of it. So you can see the setup here on the screen. I've got a bunch of different 50K accounts that, we're going to handle in the manner I described yesterday, where basically I'm just trying to pass the accounts quickly and aggressively, but using Owings market analysis, obviously that's how we have our edge. But, when Apex runs that 1 day pass thing, obviously I'm going to go much bigger size. Whereas if I've got to wait 7 days to pass the eval, then I still want to get off to a big start, because for me, it's not really worth it. I'm treating these evals, the risk on the account is $35 or whatever it is, right? So I'm treating that as the trade risk, not the eval, 2,500 drawdown. So that's sort of the way I'm treating this differently. And the way that we're going to do it, let's see here. Just make sure that YouTube is not being weird. Okay, YouTube looks all right. It likes to play these weird. Okay, so the way that we're going to do it is that yesterday I had the first trade on that first account, and you can see it here at the top. Hopefully you guys can see this. Steve, can you see this okay? That first 50K account on one trade that was on ES yesterday, that's at 51,730, or sorry, 51,722 right here, okay? So 51,722, so that's one trade, so that's good. That's more than halfway to the challenge. But then one thing I was thinking of, because of the 7 days, now that I have a buffer in that account, it makes sense just to trade normal, like one contract, two contracts, kind of how I would trade my normal accounts. Because I don't need to get to that 3,000, extra fast, the profit goal. And now if I have, 1,800 in profit and I still have 2,500 in available draw, that shifts the profit to draw ratio, right? So, but on the fresh account, which I'm starting today, I want to go aggressive. I think the time to go aggressive, okay, you can see it, cool. The time to go aggressive on these, is it still 1 day to pass? Are you 100% sure about that, Steve? How long does that last? I thought it ended yesterday, because that'll be important for the strategy. I thought that was over, because if you go to their homepage, usually, doesn't it say on their homepage? And they switch now it's 71% off and $35 reset. So I don't really see anything about 1 day to pass there right now. So maybe you could just verify that. I don't. Oh, if you started during the special? Okay. Well, I guess, a lot of these, is it if you signed up, or did you place your first trade during the special, right? Because I haven't placed a trade on a lot of these. I've only signed up. So I don't know. We'll see how that works, if it's based on sign up, or is it based on, did you place a trade? That's interesting. Anyways, it'll work itself out. Just signed up. Okay. Well, if these are all 1 day to pass, then that's pretty sweet. That just helps the strategy. But I'm still going to do it the same, where, for example, on that account, now that we have a nice, we had a first trade. Not every trade is going to do that, obviously, but this one did. So now the way that I've got this set up, and this is all new for me. So I've got the quant tower here, and I'm going to be executing trades on the second account, which is, I'm going to be executing trades on the first account that's already up about $1,700, right? And I'm only going to put, one contract, two contract, kind of trade that normally on our setups. But then I've got the copy trade set, so it'll copy over a multiplier of 5 onto the next fresh account that you see on the screen under here. So this account here is now going to be traded today, and it's going to be copied you know, by a multiple of 5 on this account. So you guys will see. We'll keep track of it. I'm learning. I'm not, you know, once I get really comfortable, I'll just copy, you know, probably 5 at a time or 10 at a time or something like that. But I want to, you know, I'm streaming now. I got this new setup on the stream. And the number one thing, as always, is to keep the analysis awesome, keep all the setups, you know, be patient, follow our plan. Trading is number one for me. The whole challenge thing here is just kind of fun. And I got to, you know, learn how to adapt that to my own trading. Yesterday, you see the ES did go to my target up around, well, the ES did what we thought it would do yesterday. And had I held that first trade on that account, I would have passed the challenge on that one trade. But again, I didn't, because this trailing draw, you know, when I was long 7 contracts, you know, if you can be up 2 grand and then a piece of news comes out and boom, you're back to, you know, break even, you blow the account. So I'm going to have to, I've made a decision that on these accounts, I'm still waiting for my setups using OMA, obviously. But what I'm going to do is I'm just going to be a little quicker to take profit because I have big size on. And I think the strategy for these that's smart is still wait for the exact same perfect setups. But for me, being aggressive, put on some big size on the fresh account. I'm not putting big size on the accounts where I already have a big cushion. But on the fresh accounts, put on big size. And then, you know, like yesterday, I took profit at 5 points, whereas I normally would have tried to get maybe 10, 11 points on that ES trade. So that's okay. If I have to adjust my profit taking a little bit because of the trailing draw, it's worth it to test out. You know, I can always go back to my live accounts. It doesn't matter. This is kind of fun. Okay, so just signed up. All right, cool, Steve. And Steve, how was the damage on that? That's kind of what I told you. I was trying to say with that NQ trade is that yesterday shorting didn't feel smart because you could just clearly see ES was pushing higher and the bonds were stable with rates dropping, right? It just didn't look like a good day to go short. And even if you might pick a temporary, you know, let's say micro reversal there on the hourly, I always think it's better when you can to just trade on the side that you feel very confident that the daily energy is on with all the asset correlations. So I hope you didn't take too much of a hit on that. And this is, again, you know, where being a member and being in the elite members area, obviously it adds an enormous amount of value because you've got somebody there to try and help you not only make money and learn and all that good stuff, but also try and avoid, you know, costly trades when possible. I'm not going to be right every time, obviously, but I do have a bit more experience, and generally speaking, I'm on the right side of the market. You got to get your TS data, yeah, or just sign up for Sierra charts if you want. I have we'll get into the analysis right now. I'm going to do the hourly check. We're a little behind schedule. I got my programmer here. He's working on indicators for NinjaTrader, TradingView, and Quant Tower. So that'll be cool. Yeah, Sierra charts, you're just going to have to do some research. I'll see if I can do a video, but I'll figure it out, Steve. I spent a lot of time trying to figure out Sierra chart and all that kind of stuff, but we'll get there with it. Yeah, maybe just turn on your TradeStation data for now is easier. And then when I have time to do a video for the members area for Sierra chart, I'll do that. And then that'll be good for you. And then all new members coming on, right? So we'll take care of that. We'll get there, my man. Just a lot on the plate as we get all this going. Okay, so for the analysis today, here's ES. You've still got the monthly pushing higher. Weekly is still pushing higher. I don't think it's done. The daily, you've got a little bit of a temporary, I don't want to call this an exhaust because look at the volume here, you see? So we're rising, volume is dropping as we're rising. You want to be careful, like let's say today if I saw this pattern, I go, oh, I want to short here. I don't want to short here. But if I did, I would need to be in line with the weekly and the monthly energy, and I'd want to see some good volume for trap traders. We don't have that. So I think ES is going to be tough because there is some resistance, but there's also a lot of support. So it's not going to be what I saw yesterday, which was very clean support, which is why it gave such a great trade, which is why I made 1,800 bucks almost on that, you know, first trade for the challenge, right? I went big size because I had a lot of confidence in the pattern. Today, it's going to be more choppy. You see, we just roll from one day to the next. I mean, it's incredible. I love it. All right, let's look at NQ here. And Steve, I'm trying to, you know, I just keep all personal data out of the way because I'm just, you know, identity theft and all that kind of stuff. So you can't hear that what you can see on the screen. you can basically just see like, profit loss and stuff like that. Nothing jumps out at you as like, personal information, right? Because I want to make sure that I'm good about not showing my personal information, because you never know. There's just, people can, use different pieces of information and connect them, and next thing you know, somebody's in your fucking broker account. So I'm not taking any chances with that. As much as I love YouTube, I don't feel like getting my identity stolen and my broker account's fucking ripped off. So that's why I'm careful about that. Oh God. And I think it's prudent. Okay, so looking at the NASDAQ, you've got more resistance. This is what you were talking about, Steve. I think today on the NASDAQ, you do have a little bit more resistance. But again, the fact that you don't have that big volume, I don't trust this as a resistance pattern. I think you're going to see probably continued support here and continued resistance, up in here. So I think it's going to be a choppy day. But guys, you see how we lay the foundation every single day? I mean, I watch these other channels out there, like as I kind of mentioned, and I'm rooting for everybody, guys. I'm not against anybody. I feel bad for the people following channels where I know they're going to blow up and get killed and it's not going to be fun. So one of the channels I follow, I really like the guy. He's very entertaining. And he's a decent trader, but it's not like a style that you can learn from or follow. It's not replicatable. And he, has had a couple of big, almost $4,000 losing days in a row, like 4,000, 4,000. And yeah, it looks good when you're up 11,000, but then you take those 2-day hits, 4 and 4. I mean, boom, right? So here we're managing risk, I think, in a much more, sane and sustainable way. Not to mention we have a replicatable process here that works. So I say all that because I see some of these other channels, they just go into each day, like probably 99% of traders just kind of wake up and, well, I mean, hey, the NASDAQ, I mean, it's moving. I mean, hey, it's like, it's moving. It's like, that's enough. So this groundwork that we lay every day is so important. And Steve, you can attest to this. Like, ever since you've been in this channel, like, what are our drawdowns? We manage our risk quite well because we don't get it right every time, but we're usually at least kind of on the right side of the market with this pre-market prep we do, the cross-market correlations, keeping an eye on those, and also Owen's market analysis. So I say all this for those of you who catch this later. Just realize trading is not as easy as a lot of the gurus make it out to be. And in order to actually live from this and be successful and consistent, this is the kind of like dedication you have to have every single day, coming in, laying the groundwork. So that's why I do this. And I hope that you're able to benefit from it. Here with the NASDAQ, again, it's going to be choppy today. What does that mean? Doesn't mean I won't take a NASDAQ trade if I see something particularly amazing, the scoreboard looks good, all this kind of stuff. It just means I'm going to be extra careful on the indices today, whereas yesterday we had a clear setup for, looking for longs, right? Keeping us on the right side of markets. And guys, my COVID is still not fun, and I'm very dehydrated. It gives you headaches and dehydration, all this kind of stuff. So that's, we'll do the check here in a second. That's the NASDAQ. We'll look at the Dow and the Russell in a sec. I want to make sure we don't miss anything for 8 a.m. Here is 10-year. I think 10-year is going to be choppy today too, just like you're going to see some choppiness in stocks. So I think you're going to see some. And plus, guys, we have FOMC tomorrow, obviously. So in my experience, days before FOMC days are not days to push the pedal down to the metal. So be careful today. I'm in a little bit of a spicy mood today, guys, because I'm tired and I was trying to sleep before the stream and I almost fell asleep, and I was like, I was very tempted to just stay in my bed, but I wanted to come here and do this for myself and for you guys, and I'm committed. Unless I can't get out of bed, I'm not missing a stream, but I am a little tired and I got to wake up. So forgive me. That's why I'll be a little bit spicy. I'll be swearing a little bit more than usual. So get the earmuffs on for the kids. Bonds, choppy. Stocks, choppy. I can see it on the charts. FOMC day is tomorrow. This is what we have to be aware of. Very important, right? You have to realize the market that you're trading every day. Very, very important. Let's look at the 30-year. So now we're already seeing here with stocks and bonds, it's going to be a tricky day. So if you're at the casino and you're playing blackjack and you're going to be dealt, most of the face cards are gone. Is that when you want to increase your bet? No, you don't. So today is one of those days we're dealing with lots of, 3s, 4s, 5s, and 6s in the deck today. You can see it on the charts. So, hey, we may get a great trade, and obviously we're going to do our checks, and if we see a great one, we'll put it on. But we need to be aware of all this as the day you know, as we're prepping for the day, it's super important. So bonds, you know, still look relatively supported, which means rates, you know, dropping off a bit, still stable. But you can see here now we're trapped between some support and resistance on bonds. Same with stocks. So I do think stocks are still going to be more supported than not. And it looks like bonds are going to be more supported than not, meaning rates are still coming down a little bit. So it's yesterday was more of a risk on day, as we called out before the day started with ES. Today is still semi risk on. It's just not as risk on, and it's going to be more choppy because of where we're at in the charts and FOMC coming out. So keep that in mind. Okay. Not a good day to, you know, be super aggressive and get all excited. Save your powder for the Fed. Again, we'll take some trades. We'll see what we see, but know the day. Tomorrow's the Fed. That's going to be a big day. Here's gold. You know, I'm not going to go into the higher time periods on gold right now, but I have a feeling we're just punching up here to, you know, 2070, maybe 2065, and then we're going to roll over and get smashed. So don't get too excited about this gold rally. Now, that could all change if anything happens in the Middle East. But right now, what we're seeing is a lot of resistance up here. It changes from day to day, okay? So for today with gold, we've got a similar situation as we've got with bonds. You can see here, you've got a lot of support. Gold broke through right here. That was a key resistance level. Very choppy day yesterday in gold and silver. We broke through that. That's probably going to be support. Just like on bonds, when they pull back, you'll probably have some support. Just like on stocks, when they pull back, you'll probably have some support. I'm just not expecting them to, you know, rifle out of support, you know, and just race away. They're going to wait for the Fed. Unless somebody has inside information and they're front running the Fed, then we'll see that on the charts. So that's fine. All right. So silver is probably going to be the same. We got about 8 minutes here till the check. Now silver, yeah, remember we called out when silver retook 2304, Steve. I posted in the members area. You know, keep an eye. Not a bad place to buy silver there at 2304. That ended up, you know, working out nicely. I didn't take it. I was busy with ES, but you know, it wasn't bad. So here with silver, you got a little bit more resistance than with the other markets. Why? Well, you're actually at the weekly near high, so there is a difference here. You have some resistance here on silver, some resistance here at silver, and you've got some big volume there as well. So with silver, I do think choppiness as well. So all the markets, we can already see that the theme of the day is going to be chop. Okay, so what does that mean? Number one, be careful, chop, Fed tomorrow. Number two, what do? Well, look in our pocket and we say, where's my chop strategy? Where's my range bound congestion strategy? Oh, there it is. That's the one we trade, right? We're not looking for trends today. So that's the way you do it. Okay, copper and platinum, just quickly before we look at the hourly charts, they're going to be the same. Yeah, I think you're going to see a lot of chop on copper. Let's look at platinum. Here's platinum. Chop. Let's look at crude. Just doing this faster, guys. We'll go into more detail after the check. I just don't want to miss anything for 8 a.m. if there is something. I don't believe we have any crazy news today. I think we've got home sales or something like that at 10. Or no, we might have, there's something at 10. Tell me what it is, Steve. I can't remember with my COVID here. I'm forgetting things. So with crude, you know, we said be careful yesterday on the long side. You know, turned out to be good advice. And the reason for that is because what you can see on the weekly and the monthly. So I would expect, I mean, if crude stays under pressure today, if it gets down here around 74.50, that would just be a great place to buy. So we'll keep an eye on that. The dollar, the euro's clawed back a little bit here against the dollar. If we look here, 108.67. So I believe we were here. So you've got some support here for the euro. I think the dollar will give back some today. So that could help metals. You know, I think metals be supported if bonds are supported, rates are dropping. The euro, you know, we punch back up here, gives back some against the dollar. So, you know, choppy, but looking more or less from the long side, probably on metals when they pull back to their support zones. Long side on stocks into support zones. As long as bonds stay supported, rates are down, and the euro is pushing against the dollar, we've got a good game plan for the day. Okay. Hope that makes sense. Look at the hourly chart here. I had to squeeze all this in here a little bit now because, you know, we're going to execute the trades, but that's fine. Let me just move my daily over there. Give me a second here because I got the execution quant tower thing. All right, so let's look at, we got the 4-hour chart here and the hourly chart. Let's see what we got shaken for 8 a.m. So ES, you know, I really like having the daily on this chart, but we'll figure that out. Very important how I have my charts set up. There we go. There's the daily. All right, so the ES is pulling back a little bit here. It's not an area where I want to get long. Not an area where I want to get short. So it's an area where I want to do nothing. I'm going to be very funny today for the record, just based on the fact that I'm feeling like shit. I'm going to have to amuse myself a little bit. So fun. All right, let's look at NASDAQ. NASDAQ for the 8 a.m. check here. Probably going to be similar to ES. Yeah. So guys, this is not a place you want to get long or short, because we're probably headed on the NASDAQ. We're probably headed back down to 17,560-ish, right? We're not near the high of the day right now, in my opinion, and we're not near the low of the day. I try and pick trades off where I think we have daily support or resistance. That's going to give you the best odds, especially when you're in line with what the weekly and monthly charts are doing. The NASDAQ, nothing. This is how I eliminate the markets for each check. We'll look at the Dow and the Russell in a second. I don't really have time right now. Let's look at the ultra bonds here. Yeah, so we're kind of in no man's land here on the ultra bonds. Not a place we want to transact. You guys can see here on the daily ultra bonds, you were right in the middle of the daily range, right? Do you want to enter in the middle of the daily range on an expected congestion volatile day before the Fed? No, no. Unless you want to gamble, then you can totally do that. All right, let's look at gold. So gold, you've got, you're closer. You got a lot of support. We're closer to support here with gold. I'm not really seeing a pattern here for 8 a.m., but you've got quite a lot of support here on gold. Nothing I can see where I'm like, oh, I got to take this or I'll kick myself. No. Silver. Silver was at this key level. We called that, 20, I gotta sneeze. Called that key level of support for silver yesterday at 2304. And that was you could see here on the hourly, that was a good level. That was when we reversed right in here. This is when I posted it to the members area and said, guys, right here, I said, when silver was at 2305, I said, if you want to buy it, it's not a bad spot. You got a ton of support at 2304, and we were coming out of this exhaust reversal. I didn't buy it. I was busy managing my ES position for this fun challenge thing, but good to be aware of other opportunities. All right, let's look at, so silver for the 8 a.m. close, which just happened here. Oh, let's look at copper. Platinum. Steve, do we have any news at 8:30? I don't think we do, but still good to know. There's platinum. No, this is going to be, mark my words, guys, by the end of this day, you're going to look back on this day and look back and you're going to say, this is a good day to be patient and to focus more on not making mistakes rather than, being aggressive and hoping you don't miss anything. There are certain days where you really want to be aggressive and you hope you don't miss anything. And you have your mindset set for that kind of a day. Today is not one of those days. Again, doesn't mean we won't take a trade. We might. We're going to be extra selective and extra patient and let everything come to us. I think crude's going to probably continue to correct pretty good. So crude is the one market that looks to me like we could be in an hourly trend run to the downside all day. So crude could be a good one today to short on pullbacks if we continue to head lower. Because crude's kind of in its own little world right now. That's one of the reasons I don't take that many trades on crude, is because it is kind of in its own little world. It's not really responding to the dollar or bonds and rates right now. So it's just a lot easier to get the read on indices, bonds, metals, FX with using the intermarket correlations, right? Whereas So crude, you just got to be a little more careful. At least I want to be more careful. Let's look at Bitcoin and Ethereum. We didn't check into those. This is a new setup for me, you guys, in terms of creating the challenges on all this. Get everything organized. I thought that'd be fun. You guys can see trades placed on the actual screen here. So here's Bitcoin. You know, I think Bitcoin probably wants to push a little higher, maybe up to about 45,000. Not today, maybe, but I think it's going to pull back a little today and probably set up a push for tomorrow. It's going to be interesting to see what the Fed does tomorrow. I think the Fed is going to, in the past, what we've seen is that, you know, there's the Fed has a strategy, right? It's not like a conspiracy. It's more, it's a economic management strategy. Their goal is to manage the economy, basically. They do that through setting rates and, you know, employment rate and so forth. But they do that not just through rate setting, but they do it through narratives, right? That narratives are what shape the economy. So you'll have the Fed speakers come out. And what I've noticed the last several cycles of Fed announcements is that all the speakers that they send out, you know, on their little parades before the announcement, they'll lean one way, and then Powell will come out and totally lean the other way, right? So, and I'm sure they've got a good reason for doing that based on what they're seeing ahead for the economy. I don't pretend to, I don't pretend to think I know how difficult it must be to run an economy, right? There's a lot of things I don't like about the Fed, but then again, you know, is there a better system? I don't know. And I'm sure they have a reason for why they do things. You know, I'm aware of the fact how they were set up and all that kind of stuff. And sure, I'm sure there's conspiracies going on. Wherever there's a lot of money involved, people are going to be, you know, shady and do things. And I'm sure that happens at the Fed too. But my point with all this is that with the Fed right now, with the meeting coming out tomorrow, a lot of the people they paraded out, you know, the other Fed members have been very hawkish this time leading up, right? They've been trying to talk the market down through hawkishness. Say, oh, we're probably going to leave rates higher and this and that, blah, blah. I wouldn't be surprised to see Powell come out tomorrow dovish and have the market just spike to the upside. And that's the one last little hurrah before it basically sucks in everybody. Now we're really going to the moon. You know, S&P's, like, what's the S&P at right now? 49.44. So, you know, we hit S&P 5,000. It's a great headline. You want my prediction for tomorrow? That's the prediction. We'll see if it comes true or not. I would be super surprised to see the S&P roll over before we hit 5,000. So let's see how that goes. So Steve says, will I stream during FOMC? You know, it really depends on my health, right? I haven't been this sick, as sick as I am now for this long. I've been sick for like a week now, just exhausted. I haven't been this sick since I got COVID the first time in 2020, almost 4 years ago. So my wife went out to get some really good medicine for me today, and it's the medicine that really helped me last time very quickly. So I don't have the COVID nearly as bad this time. So I'm hoping when I get that medicine and I take a big dose of it tonight, that I can get a good night's sleep and basically wake up feeling 100% tomorrow, that or 90%, right? Whereas right now I'm at like 50%. So if that happens and I have some energy, then yeah, I might stream the Fed tomorrow. But you got to realize here in Sweden too, it's pretty late for me when the Fed, you know, they're at 2 o'clock is the rate. Nothing will happen there, but then he's at 2:30 speaking. So for me, that's 8:30 at night. So let's see. I generally don't trade the mornings of the Fed. So maybe tomorrow we'll just switch the stream and I won't stream in the morning and I'll save my energy for streaming the Fed. Would you like that, Steve? I think that makes more sense because I don't take trades on the mornings of the Fed announcements anyways. Yeah, I'm 9 hours. What are you, Steve? Mountain time? In Utah, is that mountain time? I always mix up where mountain and central time off. Anyway, so let's plan on that. If there's not something unusual happening with my COVID and my health, then I won't stream. We'll stream today. We'll see if we can find some good trades. we're aware of the fact the Fed is tomorrow. And tomorrow morning I won't stream because there's no point. And then we'll save the stream for the Fed tomorrow afternoon. Well, that's a good idea. Yeah, I think. Yeah, Mountain. Okay. Yeah, I think we'll shoot for that for tomorrow, streaming for the Fed. I think. All right. So let's just get into a little bit more analysis here, guys. I'm a little cranky today, as you can tell, but it's warranted. I'm tired. Let's just go back and scroll through. So here's ES again. Get so dehydrated with the COVID. Really, like I can't drink enough water. Okay, so yeah, ES here. I do think we're gonna just be pushing back down to support. And you know, if we start to trend down here and we pull back in the trend and say, well, Andy, why wouldn't you short that? Guys, for me, the reason I have such a high hit rate and the reason that I manage risk so well is because I don't take trades, generally speaking, against the higher time period energy, right? I just don't do it. So when you have conflicting energies like you have right here, this is the daily ES, you know, yeah, you're at some resistance now. You're probably headed down to, you know, this level here, 49.30, probably down in here somewhere. Like I said on the NASDAQ, you're probably headed down to 17,550 or whatever it was I said. So, but, and back to, well, then why when I look for shorts, if I'm pretty confident we're on the way down there? Because when I look at the weekly chart here, this is the weekly ES, guys. So you see, we're firing to the upside. I've been at this so long. I know the odds are to trade in the direction of the daily and the weekly, right? So I would prefer to wait for the daily to get back down into support. And then if I have a good buy signal down there in support, at least I'm where I think the daily support level is for the day, maybe around the low of the day. And I'm also going with the weekly energy, which right now is to the upside. That's how you shift the odds in your favor. Now, these are the things that I teach in the course is, you know, if you want to have a long career in trading, the first thing you got to learn how to do is, you know, be patient and, you know, not make mistakes. Wait for the right trades to come to you. It's very, very important. And so that's why I'm so picky. And that's why we don't have, you know, minus $4,000 days like other channels. No disrespect to them, but that's just not how I like to do it. I like to trade even the challenges here, even though we're going to go like, you know, I'm going more aggressive on the size, right? Because I'm experimenting with these challenges, just seeing how they work compared to my own money. But in terms of the trade selection, I'm still going to be identical on my trade selection, challenge or personal count. I wait for the trades that I like. Yeah, exactly. It's super cheap, Steve. It's $20. You know, hopefully you'll be at 3 times $2,000 payouts on Apex this month, and then maybe another 3 times 2,000. So hopefully you can pocket 12 grand, 30 days. And then the data will be not, it won't be that bad. And it's good. I would suggest, like, I have TradeStation, which I probably won't cancel because I love Sierra charts, which is my primary use. But if Sierra ever went down, it's great that TradeStation's there as a backup, and for $20 a month, can't really beat it, you know? Right. Yeah, exactly. May the odds forever be in your favor. Yeah, it's so true. I mean, you think about it, trading is the Hunger Games, right? It's dog eat dog. Everybody's competing against each other. You know, you just gotta. It's a war of attrition with trading. You gotta, and I think too, like with a lot of the challenges are a lot of fun, and I can see why people like them, and I think they're a good idea. And like I said, that other company I'm starting with some friends and some partners, so it's going to be in that direction, just a little bit of a different spin. And I'm doing that, and my partners and I were doing that because we do think there's a lot of value with this type of stuff, although ours is going to be very different. But one thing, you know, one of the downsides of it is that it's kind of made the expectations of trading a little bit unrealistic, right? People think that they're just going to get started and, you know, make 20, 30 grand a month. Whereas realistically, if you can do this from your home and consistently make whatever, pick a number for yourself, whatever you make it your job, if you can make that from home trading, that's great, right? And so what I mean by that is you don't have to, you don't have to rush trades. You take a few good trades a month that end up giving you, decent payouts. There's your salary, like it's just, I trade much better when I focus on, real world and manage my expectations accordingly. Just, it's never a good idea to be over aggressive. I'm gonna get some water again. Okay. Yeah, exactly. Yeah, totally. They should come on in and hang out. Yeah, prop firms can help. Yeah, I think prop firms are a good idea. That's why I'm having fun testing it out a little bit. I just think it's good for people when they trade prop firms to just have some realistic expectations. Like everybody's like, oh my God, you didn't make, $14,000 today. It's like, no, sorry. But I make 2 or 3 grand, a few days a week. That ends up adding up for after a while. Not a bad way to go. All right, so NQ pushing down here. You're going to have a lot of support somewhere down here into, like I said, probably right around 17.6, maybe a little below 17.6. That's the area I'm waiting for on the NASDAQ. Now let's look at the Dow, since we didn't really look at the Dow as much. By the way, the long yesterday that I took on that first challenge account and made $1,800, well, 17.25, whatever that was. On that account, before we look at the Dow, that was on ES. If you guys recall yesterday when we were laying the groundwork for the day, here's the ES hourly chart. Remember when we were here talking about what we expect for the day, and I said I'm waiting for a pullback down in here, low 4900s. But when I stopped streaming at 10, I still watched the charts. So when this closed at 11, I could see with Owings Market Analysis that, hey, the odds were this support level was probably going to hold and we weren't going to head down here. So I originally set an order to get long at about 49.11 and a half. And after about 10 minutes, I could see we weren't going to fish down there. So then as this was pushing higher, I think it was at like 49.18. I moved my order up to 49.15 and a half on those 7 contracts for that first challenge account. And then it did come back. It filled me. And then I got out here at like 49.20. I wanted to hold until these highs up here. But again, with that trailing draw, I just, I'm going to learn how to manage those trades on big size for the challenge, because you manage them different than your personal account for sure. Because on the personal account, it's just so much easier. If price is here and my target is here, I can very easily just move my stop here and protect 3 or 4 points and try and just let it go to my target. So that's a little different with challenges, but that's what makes it fun. Anyways, you can see how patience pays off, right? Because a lot of people, if you don't do this analysis correctly and pick your spots correctly, it's so easy to look back at the charts. Oh, I would have done, but we're doing this all in real time before it's happening, So a lot of people probably went long up here at 49.20 thinking we're going to 49.50 and oops, no, we're not. Whereas, being patient and waiting for the market to come back and trigger our setup and support, those are the trades you want. They still don't always work, but you're going to have a lot higher probability of success. And even on a lot of the losses, because, where I like to take my trades at these key, daily, weekly support levels, resistance levels, if I'm shorting, and I like to long against support or short against resistance. One reason I like that is because it gives me the highest probability for my trade to be a winner. But the second reason is that if the trade is going to end up being a loser, when you're leaning against that critical weekly, daily support level, let's say if you're going long, it'll sit there. It's a key level. It doesn't just, you don't just get in on the trade. Very rarely you get in. If you get in at the right level, even if you're wrong, very rarely will you get in and the bottom just falls out. And you're like, whoops, okay, went to my full stop. I take a big loss. That happens sometimes, right? That happened to me on crude like 2.5 weeks ago or something. So that will happen. But I didn't pick a good level on that trade. That was a stark reminder. But usually I pick decent levels. And the reason I do that is because when the trade is going to be a loser, you can usually see it ahead of time and get out with, you know, half of your stop loss or you know, a quarter even. And it's a great way to manage risk. I mean, can you imagine having 4 straight losses in a row? Which, guys, it happens when you're trading, when you're day trading, you're going to get 4 losses in a row sometimes. You're going to get 5 losses in a row. But imagine if instead of them being full stops, you know, you take a quarter stop here, a third of a stop here, a half here, a quarter here. Suddenly you got 4 or 5 losses and you're looking at your balance and you've really only taken 1.5 full stop loss sizes on those 4 or 5 losses. That is the key to longevity in trading. That is how you manage your risk. And then the wins, they come. And, you know, when the wins come and they take, you know, they take care of themselves, if you don't have a huge negative column to offset because of all the crazy losses, the winning becomes a lot easier, right? This is so important. That makes sense, Steve? Because I don't see anybody talking about this out there. Let's see. You didn't have live data. Oh, right. Exactly. Not a good idea to take a trade without live data at all. The hourly flipped. Yeah. And it just wasn't a good overall place because you could just see it wasn't with the overall asset correlations yesterday, right? So it's a good learning experience. So keep a journal, write it down. Like, well, you were kind of, yeah, that was a decent little resistance level short term, but you were going against all that higher time period energy pushing to the upside, and you were going against, you know, the prevailing asset correlations for that day yesterday, right? Which was bonds were supported, rates were dropping, the dollar was, you know, the euro was off the lows against the dollar, you know, metals were pushing higher. It was more of a risk on day. So you just don't want to be shorting indices on a risk on day, even if you think you have identified a temporary, you know, little resistance level that might give you a 30-point correction on the NASDAQ. It might do that, but the probabilities on that trade are a lot less, right? You're playing blackjack on that particular trade right there. You know, you're doubling down on, you know, a 7 or something, right? Just wait for the 11 and double down there. That's kind of how I feel about it. Crude oil. Yeah, crude. Yeah, I'm looking for shorts on crude today, depending. So yeah, definitely crude looks in play from the short side because I think a lot of people are off sides right now on crude. A lot of people probably went long up here. I'll bring that up here. Let's bring crude. 10 minutes delayed. Yeah, exactly. Not a good idea, Steve, to trade with 10-minute delayed data. Oh gosh, well, don't do it again. So here's crude, guys. Just like we said yesterday, go back and watch the recording for those of you who watch all this later. Yesterday when crude was here, right? This is the daily chart from yesterday. You know, we just said, look, be careful here because crude's probably going to head lower, you know, and that's what ended up happening. So today, I do think we're probably going to want to head down here, maybe 74.80. And then I think there's going to be a lot of support there. I just think there's a lot of people. Look, we've been trending here on the daily crude chart for quite some time. You can see the volume here. See how that volume kick up here? See how, and then boom, it kicks up on that chart right there. That means that a lot of people got excited and went long, and now they're all puking, and that's why we're heading lower. So the volume is important. Not just the volume histogram. I use the volume histogram, it's very important, but also the volume profile obviously is super important. So speaking of the volume profile, you know, I don't talk about the composite volume profile every day, guys, right? Because it's not changing that much every day. I talk about it when there's something new to talk about. But here on crude, you can see with the, you know, volume composite, we're kind of right at this low volume area here, right? So if we start to chew through this low volume area, 75, 70, I mean, probably we're going to quickly head down to this last, you know, major acceptance area here at 74.80. So that's why I'm calling out 74.80. And you also have a ton of OMA support down here on the daily, the weekly. So I'm looking for how to match up the composite volume profile with the key OMA levels. That's what gives the edge. If you're trading with just the volume profile, good luck to you. Okay, so yeah, I think crude is, back to Steve's point, yeah, just got to wait for a pullback. Hopefully some some longs. So some aggressive buyers will come in and think the low's in too early, push it back up. And then you get one of these types of situations where the hourly is trending down. You patiently wait, crude pops, boom, you're short. And then that's what you want. An example of that was back here on this 8 a.m. bar that I missed the other day. I didn't take this, but I saw it right after and I thought, shit, I wish I would have taken that. But you know, you can't catch them all. We'll find it, guys, because it was a good example. This one right here. You see how we're, and on this day too, I thought crude was going to be weak this day. So you don't chase it. You wait. That's where you short. Why do you short there? Because you have a very clear idea of where your stop needs to be. And then you have a much better reward for your, you know, the risk that you're taking on that trade. All right. So that's important. So yes, we will, you know, unless something crazy happens, we will wait to look to short crude today. Definitely into 7. What level did you give, Steve? You said, what'd you say? You said, like, pop up to 1 hour, 4 hour congestion trend lines. Yeah, I would even be waiting more for the, yeah, those are kind of lining up with the daily, you know, the daily zone as well, 76.80. So anything up into 76.80 would be fantastic to short crude today. I'd be very careful, crude oil trader, if you're listening. Careful on the long side today. I think 74.80-ish is your safest spot to start buying. That's just what I'm seeing on the charts. Yeah. Yeah, just wait. Don't buy here. And if you caught the stream yesterday, crude oil trader, I said don't buy crude oil yesterday. But he's the kind of trader, he's so good. He can just buy crude oil. Like, I could tell crude oil trader, I could just tell he's so good at trading crude oil. Like, you can pick a market that's going straight up or straight down, and he can take the opposite side of that market and still make money. But he's 1 in a million when it comes to that kind of trading. I don't have many students that can do that. In fact, he's the only one that can do that. So I don't recommend it. So for those of you who are not crude oil trader, wait for crude oil to get down to the 74.80 level before you start getting excited about longing, unless you want to contribute to the longs puking party, which is underway right now, which is going to cause the market to go down to that level. Then you can get long earlier if that's what you want. All right, let's look at ES again. So do we have any news coming out at 8:30? I don't believe we do. I checked. Check again here real quick. Because if there is news, we'll always look for our news trade, just like we look for our open trade. So now we've got consumer confidence at 10. We got the house price index at 9. That's kind of a medium type situation. We got the Fed tomorrow, guys. Just that's the big one. We got to sneeze. Hang on. And I should make the sign on the channel. Trading with COVID. Be fun. Okay. So, any more questions, or we will get back into some more detailed analysis. If you're just joining us, it's a day to be careful because number one, all the charts are showing us that we're going to have a choppy day across all the asset classes. So it's a good day to not put the pedal to the metal today. Okay. And you also have the Fed tomorrow, which is generally speaking, not a good idea to get aggressive the day before the Fed because the market's just kind of, the liquidity dries up. There's not as much volume and it's a little bit more choppy and a little bit more like, there's different kinds of choppy and volatile. There's like when the liquidity dries up, there's not as much volume. It gets real snappy choppy, which is really hard to trade. And I think today is going to be one of those days because the Fed is tomorrow and the OMA charts are showing us that. So what do? It doesn't mean we're not going to take trades. We're going to be here. We're going to wait. We know our levels. I expect it to be a moderately risk on day, but not like yesterday where we called, you know, pretty risk on and nailed the ES on that pullback yesterday to 49 and 49.15. 49.15 it was. But I do expect there to be some support. But it's not going to be like yesterday. There's going to be more traps today. So just be aware of that, and you'll lose less money than if you didn't know that. You know, that's going to be a beautiful situation. Subs only mode. Yeah, I don't know, Steve. I literally, before we went live, it says to me, it says, do you want to let all people comment or only subs? I click all people. Thank you. And it goes, okay. And then I go live, and then it's telling me only subs. Well, you know, look, if people I can't change. I've tried to make it so everybody can comment, but look, if you're here and you get value out of this and you want to comment, then fine. And if you don't, then that's fine. You know, I don't know why it's doing that. It's a YouTube thingy. Okay, so let's look at the daily, weekly, and monthly charts again. And you guys can also see here, I'm going to go ahead and bring up the daily volume profile for you, or ES. So here's the daily volume profile. We'll go over the volume profile since we've already gone through all the higher time period analysis. Sorry, this is for the euro here. I mean, the FX markets are kind of useless on volume profile. I mean, they give you a little information, but the indices are much better, and all the other futures markets. So let's load ES here. It's gonna be so nice when my wife gets home with some medicine. So here's the ES daily volume profile, okay? And you know, if you look at yesterday here, you see how we just ripped through this area on not a lot of volume, and now that's why, you know, you say, okay, well, you want to use, people always say, well, you know, should I use a low volume node or a low volume area on the volume profile as a rejection point, you know, to enter on a trend? Yes, when you're in a trend, when you're firing to the upside, use a low volume, you know, spot as a as a price rejection area to jump on board. Right now, we're not firing to the upside, right? We're trending, but we're grinding trend. We're not firing trend, and bonds and everything else are not suggesting that we're just going to rocket higher today. So therefore, we're much more likely to rip through this area and probably retest this last area of minor acceptance at about 49.30 at least. So we'll see what happens, but the odds are that that's going to happen, which is why you got to be very careful longing right here. You also got to be careful shorting. It's not a good place to long or short. So when we're setting up, you know, the daily analysis and going through the monthly, weekly, daily charts, all this stuff, we're not just using OMA. I mean, OMA is what gives me all the good information and gives me my edge. But then I also just match it up with the volume profile, and it's, you know, it just makes for shooting fish in a barrel. Not really. Trading is still challenging, but it gives us a very, very good edge, and the volume profile gives you, you know, really good areas to avoid or, you know, take advantage of. So let's look at the NASDAQ volume profile. Let this load, you guys. My nose. Oh man, Sweden too, you know, like we haven't seen the sun in about 4 months and there's no vitamin D to speak of. Oh, I'm going to rag on the weather every day here. Whew. Don't come to Sweden for the weather, you guys, especially not during the winter. If you're single, women are beautiful. That's how I got stuck here. Because my wife is beautiful and wonderful. All right, so with the NASDAQ, let's look at the volume profile here. You can see here, kind of a similar situation with the NASDAQ right there, right? So I do think we're probably headed back down. See, on OMA, I think the good level is 17.5, you know, 50, 560, somewhere down in there. I think you're going to have a ton of support. And then looking at the volume profile, I mean, look, you've got all that previous, you know, volume coming in right there. So I wouldn't be surprised. This is where people will retransact and probably, you know, push it back higher. So, and then of course we're using the hourly volume profile as well and a bunch of other stuff, but to give you a little bit of an idea of, you know, how we manage our risks so well on this particular channel. Okay, let's see. Do we have any questions? It's 8:30, so we got about a half hour until our next check. We will stream tomorrow during FOMC. So tomorrow I'll take the morning off. Nice. Hopefully the medicine my wife gets, it was really good last time. So it should be awesome this time, and I should finally get my energy back for tomorrow for the Fed. That'll be a great day. Moves today with low volume. Yeah, exactly. Yeah, it's thanks, Steve. Yeah, sub and you can comment. Yeah, exactly. Well, I think, you know, unless you like, you're taking the course, Steve, so that's why you understand what I'm talking about. A lot of other people, they're gonna have to spend some time and really, you know, pay attention to how to use price action the way I'm laying it out with Owings market analysis. And if you've got patience and you know, do that, you'll learn a lot and make a lot of money. but it does take a little bit of time because you can see it just looks different from what other people have out there. All right, so yeah, Steve said moves today with low volume, they cause the snappiness. Yeah, they do, exactly. So you'll see today here, for example, on the NASDAQ daily chart, what you're going to see, do you see how the volume here on the daily is decreasing as we're heading into the Fed? So this day is probably going to be even lower volume. So what does that mean? You're going to have a lot of choppiness and it's going to be on low volume, which gives you those snappy moves. Those are the hardest to trade. If you can know that before the day starts, you have a huge advantage, right? So I know that, which is why I'm not going to be particularly aggressive today, because that low liquidity is going to be across all the markets, right? Now, with that said, crude could still set up some good shorts, but like on NASDAQ, today's going to be one of those days where, you know, you're going to see these scalpers get into a position that they're usually used to it going, let's say, plus minus 10 ticks, just kind of, it'll go, these scalpers you see, they'll get in, it goes plus minus 10 ticks. And there are some really good scalpers. The odds are, you're not going to be a good scalper, but there are some good ones, right? But today's going to be one of those days where if you're not a really good scalper, you're used to getting in a position and it goes 10 ticks, plus minus, and you're kind of managing your position. Today's going to go 10 points, right? Which is going to be 40 ticks instead of 10 ticks. And that's going to, that makes trading a lot more stressful. When trading becomes more stressful like that, because it's unexpected, these big moves, and you're in on that position, all of a sudden, the cortisol starts spiking in your body. When the cortisol starts spiking, the brain chemistry, is off. The fight or flight gets kicked in. You can't think clearly. That's when you make all kinds of, mistakes trading. I mean, trading is a very complex game, which is why, it's zero sum, and those who can do it get paid what they get paid, right? So just keep in mind, if you have this information before the day starts, it's going to help you. And just, the motto of this channel is it's not about the money you make, it's about the money you don't lose. Because if you control the money that you don't lose, the money you make is going to take care of itself, and you're going to do very well. All right. My monologue. Told you I was going to be grumpy today with my COVID. Okay, so I'm looking at the ES yearly and quarterly charts on my other screen. Also the monthly volume profile. I do think our buddy Jerome is going to juice this market tomorrow. I do. So I mean, we'll just have to see. But it looks we're coming upon the end of the month. Oh, I mean, that's interesting, right? Tomorrow we got Jerome, the Fed, and we've also got end of month, the last day of the month tomorrow. So this is how I prepare for the end of the month, is looking at the ES here. This is the weekly chart, right? So if we were tomorrow, I'm hoping, guys, that Powell comes out super dovish, which I think he's going to, because again, all the other Fed speakers have come out hawkish lately. And the pattern the last 6 months to a year is that whatever the Fed speakers before the announcement say, Powell comes out and does the opposite, right? So they've all been hawkish. He'll probably come out tomorrow dovish. And if he comes out dovish tomorrow, here's the weekly chart. You're going to see the weekly close like this. See a big potential push tomorrow. The monthly would, close like this. And you would be right into something not a lot of people are paying attention to, which is, this is the quarterly chart here. This quarterly chart is very important. So you'd be running right into this, which would probably have us correct at least back down to here, at least. So just, same thing how we called that beautiful short on the NASDAQ at the yearly trend line for the NASDAQ, 17,776, which was here. And I think we're going to run into that again on the NASDAQ. But, this might be the high. I think right now we're much closer to the high of the year than the low of the year. So I'm waiting for the monthly and the weekly charts to confirm that we are rolling over. Now, if that doesn't happen, that's fine. We trade what we see. I'm not married to any one side. Predictions are stupid because things are always changing. So I'm just using the charts right now. I think we're going to peak here and then roll over and at least, you know, be set up for a decent little correction, if not putting in the highs of the year here now or soon. An election year. Yeah, but I think the thing about this particular year is that the powers that be, I think I don't get into politics, and to be honest, I'm apolitical because I think they're all monkeys. Like every single politician, I literally think is retarded. I don't like any of them at all, and I don't think that they're there by merit. I think that they're there by selection. Is my feeling about it. You're free to disagree, but. So I think this particular year, they have some serious motivation to see somebody like Trump get in, the powers that be. And if that's the case, you know, it could make sense to tank the economy heading into the election, because then they can blame it all on Biden and everybody will be upset and they'll vote for Trump. So, you know, it's like just because it's an election year, and election years usually, you know, mean the market rallies into the election. I have a feeling this year is going to be different, not just for that reason, but also what I talked about on the channel the other day, the lagging effect of rates. Even if the Fed starts to ease, let's say they start to ease in March, which is where the current dot plot is right now, right? Yeah, March, right? So even if they start to ease, all those rate cuts, rate hikes that they already put in, it's like a tsunami slowly coming to shore. It hasn't reached us yet. So it doesn't matter if they start to cut right now. And on top of that, they don't control the long end of the curve. So they control the short end of the curve. And these are two very different things. So it's not as black and white as people think in terms of like the Fed's ability to, you know, kind of set the rates and control the economy. They can do it to a certain degree, but it's going to be an interesting year. So my bet is that it's going to be, I think it's, you know, I think the market's going to roll over here. And the reason for that too, it's not just, you know, I'm not just guessing, and sure I have some ideas about the economy and the Fed and all that, but those are just ideas. This is more just, this is the NASDAQ. Look here, this is the yearly NASDAQ chart. We're firing to the upside here for many, many years in a row. This is 2022 congestion entrance, 2023 rebound back to the highs. But now the yearly is officially in congestion. So the odds are that we're going to stay within this range. We might push a little higher, but those are the odds. And also, when you look at gold, for example, on the yearly and quarterly charts for gold, because I do the same thing. Sorry, guys, I'm really tired, but I do the same thing on all the higher time period charts, the yearly, the quarterly, as I'm doing here every day, talking about the asset correlations. When I'm looking at a yearly or quarterly NASDAQ chart, I'm not looking at it in isolation. I'm looking at, well, what is gold telling me on the yearly, quarterly? What's silver telling me? What's copper telling me? You know, what are all these other markets? They're all interconnected. What are bonds telling us? Right? So look at gold here. The quarterly gold chart. Quarterly, guys. So see how here spiked up, rejected, because the quarterly's in congestion here. Spiked up, rejected. Spiked up, rejected. Spiked up. So is this going to be the one now that goes through? Maybe, but the odds are, you know, resistance is resistance until it's broken. The odds are that that key level is going to continue to be super strong, and that gold is probably headed back down to 1800 before it's headed anywhere else. Now, could that change if things escalate in the Middle East and something crazy happens? Yeah, that can change. But charts right here are suggesting we're going lower before we go higher. And a lot of the charts are suggesting that. What does that tell me? It tells me that there's a possibility for some type of liquidity event, liquidity crisis. Maybe they're going to have problems with the bank term funding program when it expires in March. Maybe they're going to have problems with the reverse repo thing again. Maybe the Treasury is going to have problems issuing debt and finding foreign buyers. We don't know, but the charts are telling us something is lurking in these murky waters that we need to be aware of. Now, it doesn't matter for us. We're here trading every day. We're very nimble. We react to what's happening day by day, but I still want to know what's going on for the yearly, the quarterly, and all this kind of stuff, right? So, all that wonderful stuff said, let's look at the hourly chart for the upcoming check. So it's 8:40 a.m., 8:41. We've got about 15-20 minutes till this check. So the indices we're not really interested in right now, again, because I think that the daily support level could be a lot lower. And then I've already explained this. Well, if I think the daily support level is a lot lower, why don't I want to short here? Because I don't short against the weekly prevailing energy, which right now is very bullish to the upside. I like it when the daily and the weekly are in agreement. Those are the trades I take on the hourly at the key support levels or resistance levels if I'm shorting. So that's why we have a good hit rate here, because we wait for those types of trades. And when you're following all the futures, that's like sitting there trading only the NASDAQ. I mean, why would anyone ever do that? It's like there's all these other markets. You can just kick back and wait for like the best setups rather than sitting there like, you know, getting mesmerized by one market and just putting on stupid trades. Guys, I know from experience, right? Like I didn't get to this point without being an idiot myself, obviously. I made all the mistakes. This is why I know now not to make them. Doesn't mean I still don't make mistakes. I do. But I'm just talking about in terms of like patience. That's a mistake I don't really make that much anymore. I am very patient because I've learned just you're not gonna make more money by forcing it or by being impatient. It just doesn't work that way. So here with the NASDAQ, we're headed lower. You see, it's great advice. And that's the thing too. This is not about like, sure, the trades we take, they make money and our analysis is great and stuff, but just by paying attention, and if you're trading your own account and paying attention, you know, a lot of the times when I'm saying, don't go long here, I mean, it's good advice, right? Even though it's only for educational purposes only, obviously. But here, you know, you see, it's like, okay, well, we're not short. Yeah, because I already know why I'm not shorting here. But we're also not long, right? Which means what? Which means we're not losing right now, which is great. And that's the thing too. Like people don't talk about the mental capital of trading. That's just as important or more important than your account capital, because confidence is everything. Like if you plan your trades out the way that I do here and the way I'm trying to teach you how to do it, then when you actually wait for that setup, it comes, you planned it, you put on your trade. If it loses, so what? You feel okay about it because you planned it, right? It's an acceptable loss. And as I talked about earlier, oftentimes the losses are a lot less because they don't even hit your stop, because you're taking them at key levels that give you the opportunity to recognize much sooner when the trade is not valid, and you get out, you know, with a quarter of your full stop loss oftentimes. It's just really important. All right. So there's the NASDAQ. I mean, if the NASDAQ, you know, was to, depending on, see, you got to be careful because the euro today, you know, because we're using all the cross asset correlation. So the euro today, this is the euro futures, right? So we're waiting. If you look at the daily chart here, see how the euro was getting weaker against the dollar each day, and then now we found finally quite a bit of support here at 108.40. Well, I think the euro is probably pushing back up here now. So if that's going to be the case, the dollar's going to be, you know, weaker today. If the dollar's going to be weaker today, what do we want to do? We want to look at the bonds. What are the bonds telling us today? The bonds are telling us that they're going to be probably supported. Let's look at the ultra bond. So the ultra bond here, you see, this is the daily ultra bond. As this pushes higher, rates are dropping, right? So you're going to have a lot of support today on the ultra bond. It's going to be choppy. Like I said, it's going to be very choppy, but generally speaking, it's going to be choppy and supported, right? Just like stocks will be probably when they hit their support level. Why? Because you have a dollar that's weakening. You have bonds that are stable, so rates are dropping. So that gives us some really good insights into the markets we want to trade, which would be stocks long potentially into their support levels. Or I think even the better trade, if the dollar continues to get whacked today, which it looks like it's probably going to based on the pattern for the euro, if the dollar's getting whacked and rates are dropping because bonds are stable, then we want to focus on a market like silver. If silver pulls back, you know, or gold, it's going to rifle to the upside if the dollar keeps losing ground against the euro and bonds continue to be stable with rates dropping. So that's how you try and find the lowest hanging fruit for the day. I hope that makes sense. Oh, good. Your TS data is working. Nice, Steve. Okay, you want me to look? Steve wants me to look at the 4-hour crude oil chart, which we'll do here. Go back to gold and silver and platinum. So here's the crude oil 4-hour chart here. So yeah, you've got a lot of OMA resistance right up here on the 4-hourly. You also have a ton of resistance on crude on the daily right there as well. So if the hourly, which is trending to the downside now, you can see the hourly here trending. If we were to get a nice pullback up into the 76.80 area, that's a market I'd be interested in shorting. Not to mention the fact that we've got the weekly volume weighted average price at 77.20, right? So if we can lean against that on a short up into the 76.80, 77 area, that's probably a good place to short, given what we're seeing on the daily and the weekly charts and the 4-hour, because now that short on the hourly would be in line with those higher time period charts. That's how you stack the odds. So I hope that answers your question, Steve. Here's gold, you guys. I think we're going to see a nice rally in gold today. And you know, gold is wild and crazy. So all we have to do is just keep our eye on the dollar. If it keeps getting weak, keep our eye on bonds. If they keep, you know, pushing a little higher, grinding, and rates are dropping, we just wait for a pullback in gold or silver, get long, make some money, and then I can go to bed and heal my COVID because I'm so tired. So that's how we're going to play it today, you guys. All right. So let's see what we got for the 9 a.m. indices. We said we're probably not going to do anything because we're not down into our support level yet. Wait. Remember, I don't have a crystal ball, guys. We're only playing probabilities. We're good at playing the probabilities. And that's all we can be good at. So ES won't do anything, so get NASDAQ. The Dow. I literally feel like I'm about to fall asleep. I'm not even joking. I'm like, vanity. Gonna be awesome. Feel better. Yeah, so the Dow. Don't want to do anything on the Dow here. Russell. So we will hang tight on the Russell. Let's look at the 10-year. All right. So looking at the 10-year. You have to be patient. Today is a day for patience. So Steve, that's good. Your data is working, and 76.45. Yeah, I think anywhere. I think 76.50 to 76.80. I think is a good little spot there. And Steve, I hope you didn't lose too much on that NASDAQ short when your data was frozen. So the bonds are probably not going to be doing anything for 9 o'clock. The ultra bonds. Not going to be doing anything here. Get gold. I didn't even realize the camera's not on, right? There we are. I had no idea that the camera wasn't on. Doesn't matter. All right. You guys don't need to look at me. You know what I look like. But I think the camera's good sometimes for when we're talking. We can use our hands like the Italians and really get into it. Here's gold. Waiting for a pullback on gold, but definitely bullish for today, which is good. Let's look at silver. All right. So with silver, so that's nice. You see, silver just tagged weekly VWAP at 23.16. We know we got monthly VWAP again at 23.04. So, you know, for silver, that's kind of the general area. I mean, you got a lot of support here on silver, but I would be more interested in the low 23s. Copper. I don't think copper is gonna be stuck today. You see how copper's heading lower with the indices, because the indices are heading lower right now. But it'll be stuck between cross currents, because gold and silver probably, if the dollar stays under pressure and rates stay lower on the back of supported bonds, copper is going to be caught between those cross currents where the metals are benefiting, but if the indices are temporarily dropping, copper is going to follow that. Re-listen, it'll make sense to you. Trust me, I just can't explain it as clearly as I normally do because I'm fucking tired. All right, let's look at platinum. Platinum, kind of, you know, similar to copper in the sense that it's an industrial metal. Trending down here on platinum now, but you've got monthly and weekly VWAP right here, so it's just got to be careful. Look at crude, see if it can get a little bit of a bounce. So we're waiting for crude to pop back in here. Let's look at nat gas. You know, sometimes, by the way, I think today we do have the crude oil inventory numbers coming out later today. They normally come out on Wednesday, but they are coming out today because the Fed is tomorrow, and so they moved it to today. So nat gas has quite a lot of support down here into 2.05. Could see it push up on nat gas today. This is not a market I trade very often, so again, I don't trade nat gas very often because I can't get the same kind of read on it. I can, you know, you can still get a great read, but I like phenomenal reads, and you get the phenomenal reads by stacking everything in your favor: OMA, volume profile, intermarket correlations. And that's where the energies are a little bit lacking in the intermarket correlations. You don't have, they don't respond quite the same way to bonds, rates, the dollar. So I'll trade them, but I'm very, very selective on them. But you have a nice hourly volume profile here, a nice tail on natural gas. And natural gas and crude oil seem to be, you know, they diverge a lot. I don't really see too much connection there, even though they're both energies. I'm not going to trade this, but the hourly is starting to trend up. Keep an eye on it. Okay, that's good. Down 120 is not bad, Steve. That's fine. Yeah, the ES long was nice. I think the trailing drawdown on the PA account is different, right? It doesn't go above. Is it, let's say you have a $50,000 PA account. Doesn't the trailing draw not apply on that? How does that work? I don't think it does. Take out profit, but I just mean, like, if let's say on the PA account you're up, you know, you're up $2,000, right? You're at $52,000. So you're not quite at a payout, but then let's say you lose all the way down to 50,000 again. Don't you still have your full 2,500 to draw? It stops at 50,100. Yeah, so that's actually nice. Once you get those accounts, PAs, then they'll be super easy to trade. I'll probably just try and get like 20 of these 50, because I was doing the math as well. You know, with the 50K account versus, just for fun, you know, I think the first goal I have is to get to like 20 50K accounts. And then once I do that, I'll just have fun, you know, with somehow, well, you're only allowed to have 20, but I would want like 2,300K accounts. But running the math, I think it actually does work better on the 50K account, because for the cost to get the 50K account, you've got, let's say $30, right? Whereas, and then you only, like, you get 2,500 in draw and you have to hit a $3,000 target. Whereas if you look at the 300K account, let's see, 80% off the 300K account costs $131. 80% off the 50K account costs $33.40 or something like that. So if that's the case, the 300K account has 7,500 in draw, which is 3 times the draw of one 50K account. So if the 50K account is $33 and you want to multiply that draw by 3, you get 3 50K accounts, then you have 7,500 total draw across those 3 accounts, and you only paid $99, you paid about $100 on the nose for those 3 50K accounts, whereas the 300K you have to pay $134 and you have to hit 3 times the profit target, right? Across the 3 50K accounts, you only have to hit 9,000 in profit, whereas, well, yeah, and on the 300 you got to hit 21,000 or something, right? So I think the 50s make the most sense. And I guess if you know, if you can get to 20 50K accounts, and then, I mean, you're going to blow some of them. That's just the nature of trading, right? It's going to happen. But let's say out of those 20 accounts, you know, if you can consistently get 10 of them for a $2,000 payout. See, because on those accounts, when you take your payout, you only have like 600 in buffer again, right? And then, you know, yeah, sure, you can build it back up, but 600 is not a lot of buffer, right? Realistically. So some of those are going to go. But I mean, if you can, I don't know, end up getting 2K, even just end up getting 2K from 20 accounts, you know, that's 40K. That's good. Oh, right. Yeah, exactly. I wouldn't pay, I don't think, the because you can pay the $85, I think, or you can pay like $150. I would just pay 85, because I would count on, you know, I would just count on, like, you take that first payment for $2,000, you only have 600 buffer. There's a decent chance that that gets hit and that account's gone. So I would have no problem paying 85 twice, because I don't think I would keep the account longer than 2 months anyways. You just don't know. I don't know. The funding thing is a whole new ball game. Oh, they raised it? That's crazy. That changes the game a little bit. I mean, it's not that much money, but it adds up if you got a lot of accounts. Interesting. Gotta check their site. Looking at the site. Oh, they raised the evaluation reset to $100 too. That's crazy. Those used to be, yeah, and you're right, 105 a month. Okay, so they don't even allow you to do the 80, the like, they don't even allow you to do the, they did update their website. I see it now. So they don't even allow you to pay like a bigger fee. And yeah, so yeah, the model's changing for sure. I think they need to bring in, personally, I think Apex is in a little bit of danger, because people are figuring out how to pass regularly and take them for money, and there's not as much fresh money coming in. It's kind of like a Ponzi scheme. And I think that's why they're running these one-day pass things, because they're trying to get people to gamble and bring in more money so they can make more payouts. Because you look at the amount of payouts they're making. I mean, sustain that kind of payout. I mean, that's, I don't know. See how long they're around. I hope they're around. I want to take at least, you know, 40, 50K off of them. So I hope they stay around for the next month or two. That'd be nice. All right. So 9 o'clock just closed here. All right. Let's take We'll see if there's going to be, there could be a stock market trade today. Absolutely. Because it's going to be choppy and wild. So that could play into our, you know, picking the right level with the right direction for the stock market. No, I'm just, I'm now just trying to, you know, get this going. Cause I've always sort of, until now, I kind of thought the prop firm thing was just like, I've tried some and I've passed some, but I'm like, you know, tax reasons and just all the bullshit. Like it's so much easier just to trade your own account. But when I look at it this way, like, okay, if I can be super aggressive and take pretty low risk and just try and go for some quick big payments, then it's oh, I thought you meant like an Apex account. Oh, PA, okay. Palladium. No, it's too thin. Platinum's good because you still have some pretty good liquidity in platinum. Palladium's just a little too thin. I don't trade palladium. I got my hands full with all these markets. All right, guys, let's take 15 minutes. I'll come back for about 15 minutes, 10 minutes before the stock market open. There might be a good stock market trade today on one of the indices, maybe the NASDAQ or something, because I do expect it to be volatile. You know, we're pretty good at picking off different levels, so we might be able to set an order, you know, that we try and get filled and make a quick couple $1,000 on a challenge account, eval account. So let's regroup for the open in about 10-15 minutes, you guys. Okay, just type questions in the chat. I'll see you when I get back. I gotta go say hi to my family, say hi to my daughter, see if my wife brought the medicine. Dude, the medicine's gonna be strong. It's so strong. If I start taking it now, I might feel good like in an hour. It'll be awesome. All right, so I'll be right back. All right, guys, we're back. Family got home. I got my medicine. That is awesome. Webcam firing here. We coming through all right, Steve? All right, guys, let's get ready for the open here. See if we're going to put on a trade. We know we're expecting a choppy day, so I'm expecting an extra choppy open. The difference between yesterday's open and today's open is that today I'm expecting more volatility during the open because of the decreased liquidity on the back of the Fed coming tomorrow, right? There's going to be less volume today, so we're going to expect quite a wild open. So, you know, using the different levels, for ES here, you've got a nice resistance level up here into 49.56, up near those highs. That could be something to watch. Let me just take a look here. I like the long side overall better. I just don't think we're at, I think we need to go lower. I don't think we put in the lows of the day. We might, we'll know by the end of the day, but I think we need to go lower first. So a potential, maybe they can jack the price up at the open, suck in some longs, and provide an opportunity to short. That could be an option. Go ahead and look at the NASDAQ. NASDAQ looks weaker. That's good. I'd feel more comfortable, I think, shorting the NASDAQ. I mean, we do have a nice resistance level on the NASDAQ, potentially. I don't know how much I like it, but into 17,692. Look at bonds here heading into the open. Get a sense of what rates are doing. Trying to organize all this stuff here. Okay, so bonds are looking nice and strong at the open here, which means that rates are dropping. So stocks, you got to be careful shorting stocks when bonds are looking like this. So that's interesting. Because if bonds are pushing up, rates are dropping, dollars getting weak. That's a pretty bullish scenario for stocks heading into the open. Go back, and if it's a bullish scenario heading into the open for stocks, the S&P is definitely more bullish than the NASDAQ overall. So the question is, would we have a spot to go long E? Because you got good weekly strength, good monthly strength. The daily, as I mentioned, I'm expecting a choppy day. The question is, are we going to see the true average here? Is that going to be the low of the day, or are we going to want to push further down here? I think we're going to want to push further down here. That's just kind of what my instincts tell me. But right now, with bonds pushing higher, rates dropping, the euro's getting stronger against the dollar, there's a lot of temporary support here at the open into 49.40. I have to see what we have. I'm gonna keep an eye on this right now. I'm not really seeing any, like, you know, the days where it's clear, everything just jumps right out and it's very, very clear. So for right now, we'll watch ES at the open, just because it's a little bit more manageable to trade. And yeah, I think we're probably going to squeeze back. I wouldn't be looking for the short side, right? Definitely not, because of what we're seeing in bonds. Rates are coming down. dollar's getting weaker. So you don't want to short stocks right here at all under those circumstances. But then if you don't want to short, you want to go long, right? But if you want to go long, for me, I gotta have some sort of a daily level to lean into. And right now, I'm not entirely convinced that 49.40 is the level I'd be willing to lean into. So that's why I'm thinking this through. Some days it looks very, very clear. On this day, I'm sort of expecting a messy open. I'm probably not going to put a trade on. I'll wait for the 10 o'clock hourly close, but we'll watch the open anyways here on ES and see what ends up happening. I mean, certainly, I guess, look, one thing, okay, you got the weekly VWAP coming in at 49.35, and you've also got, quite a lot of hourly support and 4-hourly support. So if we got down to that 49.35 level, which is unlikely, but if that happened and I saw the market stalling, I could potentially look for a long there, maybe. But again, I'm going to watch it very carefully. It's not super clear today. So what's the lag, Steve, just so you guys know if I do take a trade? Oh, crude's at 77.93. Nice. I'll wait for the hourly close on crude. All right, so usually we have like a 3 to 5 second lag, and right now the time is okay. I'll let you know when we open. I got to get my old thing had a clock. I don't see a clock here on this quant tower thing. I'll figure it out. It's all new with the challenges and all that stuff. But let's see. My main area of interest is down in here to the mid like 49.30s, 49.32, 49.34 in there. If we get down there, which I don't think we will, then that's the area where I'd have more of a line in the sand. Okay, yeah, I think the latency is pretty similar. It's maybe 3 seconds, Steve. So I wouldn't be surprised to just see it rifle back up to the highs from here based on what we're seeing with bonds and the dollar. But I don't want to, just jump in willy-nilly. I'm not a willy-nilly kind of trader. But right, with these challenges, right, because I have to have 7 trading days. So by the end of the day, even if I don't take a trade, I'm going to have to make sure that I have a trade placed on each account. I guess I can just copy trade and do like a micro or something. All right, so we're squeezing here a little bit, kind of as expected. Guys, just keeping an eye on bonds, rates, the dollar. You're going to be on the right side, right? Like we weren't looking to go short, right? So just that like helps tremendously. Just keep an eye on yes here. We can go look at NQ just for yeah, NQ hasn't quite followed ES. It probably will. Probably a good arbitrage opportunity there on NQ from current levels, 70 maybe up to 90. It's not the kind of trading I do, so I'm not going to take it. But I wouldn't be surprised to see NASDAQ squeeze up here now, because the ES is already breaking through some key levels. But these markets are going to be choppy today, guys. So I recommend, I'm giving you some analysis, but I would, just exercise caution. It's better to miss out on things. As they say, it's better to be out and wish you were in than be in and wish you were out, right? So I think that's a good name of the game for today. Yeah, I didn't see anything crazy that I liked at the open, except for the fact that I think ES, bullish here, pushing higher. I think probably going to continue to push higher. I don't think bonds are at 127.28. Yeah, bonds are pushing higher. Rates are dropping. Euro against dollar is 0874. So probably we're, as long as that picture stays into place, the ES is probably on its way back toward the highs. I don't know about like right this second, but just generally speaking, it looks like that 49.40 support level, you know, held the challenge for today. You can drink some water. Get my water. Let me just get my water, you guys. All right, we're back, guys. All right, I got the good news is I got the medicine. So last time it worked like a charm for COVID, like 4 years ago when I had it. I think now the medicine should kick in and should get back to my good old self here in the next few hours, which would be awesome. Yeah, I think ES is probably squeezing now up to 49.56. But like I said, I'm not, for me, these aren't my kind of trades. I like to take the trade when I know I'm in support. Right now, support is down here. That's why I'm not taking it if you ask me. But then again, I'm more focused on risk aversion than the majority. For me, mental capital is the most important kind of capital. Just making sure you make good decisions, plan your trades. I just find any trade that's impulsive is not a good trade. I'll look at crude now. Yeah, so crude already got whacked down, huh, Steve? Oh, no, it's at 77. Right. Yeah, interesting. Big turnaround in crude. I wouldn't... what you got to look for, Steve, now is you absolutely don't... This is blown through what should have been... This still could be resistance up here. I mean, the last line of defense is right up in here, 77.25 up in here, but I wouldn't short this because you broke all this resistance. So sure, it might head back down, but that's a pretty big, right here, that's a pretty big move up on crude right now. So I wouldn't short that. So maybe something happened in the Middle East. I don't know. Let's go ahead and check the news. I'm just checking some stuff out. Just checking up on the news, you guys. They say that U.S. home prices rose, but we've got, oh, the big news is coming up at 10, you guys. That'll be good. That'll be exciting. We've got 10 a.m. Forgot what that was. Consumer confidence. So that's good. That'll be some market moving info coming out at 10. We got mega cap earnings, Microsoft and Google on deck after the close. Okay. Yep, just going to continue to take it step by step here today, make good decisions. Yeah, crude, now all of a sudden, you know, this is ripping through a lot of resistance on crude, so I wouldn't short here. We're right at weekly VWAP as well, 77.20. So you want to see, like, right now, the fact that we've been sitting right here up against weekly VWAP for whatever the last 5 minutes. I mean, you'd want to see selling coming in, and right now on the volume profile, we're not really seeing it. So I'd be careful here on crude. So we'll just prepare for the 10 o'clock check here in about 20 minutes. The Quant Tower setup is pretty cool. I like Quant Tower. The fact I might have to get a license for Quant Tower. I'm having the indicators here for OMA built into Quant Tower, built into, I think I mentioned that earlier, but built into TradingView, Ninja Trader. We already have TradeStation, Sierra charts. I'm getting completed with the range indicator, so that'll be nice. We'll have OMA, Steve, available across all platforms. Yeah, Quant Towers, I've messed around with it a little before, and now today when I got it set up, like, it's pretty, I kind of like it. It's pretty clean. I wouldn't use it for charting because Sierra charts is awesome for charting, but for the execution on the challenges, Quant Tower is pretty good because you can copy trade within Quant Tower. So like right now, I've got this I'm executing here on the DOM. You can see I'm executing on the current account that I started yesterday that I'm up $1,700 on, and I'm only going to put one contract on that trade here that you see, but then it's going to, I already have the copier set up within Quant Tower, so it's going to put on 5 times the amount on this second unused account here. So I'm taking bigger risk on that fresh account. This is just my strategy for right now. I still think through how best to do it. All right. I don't know if crude oil trader is listening, but yes, it's true, my friend. Lots and lots of greedy people in the world. Steve, me and crude oil trader, we're talking about how most people are just greedy. Not most people, but a lot of people are like greedy, all about themselves. Those are the kind of people we're not going to have in OMA. Quiet day, but we'll just keep doing our thing. Oh, Steve, we're having all the thumbnail, the graphics are being done for OMA for YouTube. Like, professionals are redesigning the channel banner, all the thumbnails for the videos. So that'll be kind of fun. So we're gonna get a nice little look. Be exciting. They're doing some kind of a sketch drawing of me, so I'll be like not a cartoon, but you know, something kind of fun character instead of just like instead of a boring picture. That'll be sweet. Let me know if you have any questions about anything else while we're waiting here, Steve. Charge these. So for the 10 o'clock check, yeah, I think my brain, I can feel the medicine's already kicking in. My brain fog is kind of going away. All right, so for the 10 o'clock check here, let's get rocking and rolling, guys. We got the medicine kicking in. Is a medicine that I cannot name on YouTube, or I will be banned for misinforming people about the treatment of COVID-19, which I would never want to do. I'll keep that medicine to myself. Let's just say it starts with an I. Okay. I took it before and it worked amazing. The whole news media was like, don't take that medicine. I was like, oh, the news media says don't take the medicine. It's like trading. The news media tells you to buy. That's when you should be selling. They tell me don't take this medicine. I'll take that medicine. And it worked. Oh, God. Really funny. Okay. So let's look at ES here. Bonds right now look bullish. Start off with bonds, then we'll get back to stocks. Oh, bonds are reversing. This is nice. I like to see this. We got bonds coming down a little bit. So what would be cool is if bonds can start heading lower as stocks are pushing higher, set up a little bit of a divergence. But it's kind of a tough day still so far. I think, you know, bonds, we're still stuck in the middle of this range here. So tough to get a read on bonds right here. Like, are we going to squeeze? I think we're going to squeeze up here today on bonds. It just looks like that. So rates, I think, should be well contained today, which should, you know, keep the stock market afloat. Dollar is 108.72, while the euro future is 108.72. You can see gold pushing higher as we expected. Silver probably going to be pushing higher. Yep. So is there anything looking pretty risk on right now? Pretty risk on. So I do think we're probably headed back toward the highs here. But the question is, you know, would I want to get long in here? No. NASDAQ. Interesting about the NASDAQ. Kind of diverging here. Don't see anything I like there on the NASDAQ. Let's look at Dow. Yeah, don't want to do anything on the Dow. Let's look at Russ. I gotta shave. I figured I'd get myself a pass with being ill. I thought I'll shave when I feel better. Here's the Russ. You got a lot of support down here, but I just don't trust the Russ down here. I don't want to do anything. So indices probably not going to do anything here at 10. Bonds. I do think we're going to push. It looks to me like we're going to push higher. The question is, where would I be willing to buy support? I'd kind of prefer to buy support down closer to the low 127s. But may not get there. We'll see. Let's look at gold. Yeah, pushing higher. Gonna be a lot of resistance up here somewhere for gold. I do think got nothing to lean. Well, let's look at silver. You don't want to short these metals right now with the dollar giving back some against the euro and bonds being pretty well supported, rates down. Definitely more in favor of the long side with a slightly risk on bias, but I'm not, you know, I'm not longing momentum, these breakouts, because I'm not looking for a super trend day today, as we talked about at the beginning of the day. So I'm just going to wait. If this picture can maintain itself, one of these markets will give us a pullback at some point, maybe not while we're live streaming, but at some point. And that's the one I'm going to monitor and try and take. Okay, platinum. That makes sense, Steve? I'm just tired today. We'll be back at full strength soon. Yeah, I don't want to buy or sell that. Crude. Makes sense? Okay, cool. Here's crude. Yeah, I definitely wouldn't short this. Not at all. I mean, especially, you know, crude will benefit if bonds push higher, rates drop, weak dollar, strong stocks. You know, we got earnings. You know, these could all, stocks could just fire today just because those earnings are coming out. It could be like that ramp up into earnings, right? So we could have a pretty bullish day. We'll see. The fact that ES stopped at the true average here, Steve. The fact that ES on the daily managed to hold here is impressive. That might be the low of the day. And now we kind of might be range bound here with upward pressure based on what we're seeing in bonds, rates, dollar, etc. So that doesn't mean I would long or short that. Look at Euro US. Well, it helps to know in advance which direction the dollar's going and all that kind of good stuff. Yeah, I think the euro is going to continue to get stronger here all day against the dollar. We got, you know, moderate risk on for sure. Yeah, CL looking very strong. I wouldn't long CL here, but looking strong. Look at Bitcoin. And I see there. Let's look at Ethereum. Copy for the crypto world here. Yeah, Quant Tower is pretty cool. I like the way it kind of like lights up where you're holding over. Like it's pretty easy to operate. All right, we got that news announcement coming out. That's going to be big. That is a big one. That's the consumer confidence. So that's big. 9 minutes. Yeah, no, we're doing all right. I think let's continue to wait for the market to set up. Sometimes it sets up on stream. Sometimes it doesn't. ES looking very strong. Another thing you got to be careful trading these challenges that, you know, just because that if you go, especially when you go like big size, right? Because it starts going against you just at all. We got a good clear picture for today. So isn't this just, you tell me, Steve, but I'm so used to this because this is how I trade. But for you who've been here now for, you know, 2.5, 3 weeks, whatever it's been, isn't this just such a nice way to trade? Everything's so relaxing. You know what you're looking for. And when a trade sets up, you can have a lot of confidence in it. It's the way I like to do it. Instead of like, imagine most people are just, they're like blind in the desert, you know, under a scorching sun, searching for an oasis of water with their trading. Very difficult to find a full-on system that is just clear, easy to follow. I love it. All right, so ES, we're pushing higher here, but it's just, I'm not going to like, Obviously, you're gonna have a lot of support here. But what I'd like to see on a day like today, I believe we're gonna get the 4-hourly close as well here, right? I think so. Check this. Yeah, we are. Let's go through the 4-hourly charts here. So ES, you know, you're gonna continue to be wild. Probably gonna have a lot of support down here, but I'm not gonna buy it right here. Let's look at NASDAQ here. Kind of lagging a little bit. I don't really see anything matching up here in terms of what I'd want to do. Let's look at the Dow. Clear. Russ. There goes the Russ. I still don't want to short that against what we're bonds. Let's look at the 10-year here. Oh yeah. 10-year screaming to the upside. Probably going to continue to be strong support, I would say. 4-hourly trend run strong. Rates continuing to come off. Euros 108.73 against the dollar. It's not bad. Here's the 30-year. Yeah, I think the 30-year is definitely gunning for monthly VWAP up in here around 121.19-ish. It looks like the risk on picture is in place for the moment. Here's ultra bonds. Looks like they're going to be pushing higher here. But see, I don't chase these. You know, maybe you'll be a different kind of trader, Steve. You never know. But I'm more mean reverting. I like to buy support, sell resistance. So if right now I think stuff might go higher, it's already going. I wait for it to come back. Case. Look at gold. Probably going to push higher here. So like gold, for example, I think we've got such a good setup today. If bonds can stay bid, rates down, euro keeps gaining against the dollar, all of the things being equal, you know, if the hourly on gold pulled back at some point, or silver, you know, I think you could be setting up for a decent long. I just wouldn't take it up here. Silver. You know, like silver, for example, I mean, silver can be a pretty darn wild one. So if right now we're at the edge of the monthly value area high for silver. So, I mean, if we could get back down to that 23, 08 level, that would be a great spot. Copper. CL coming back down. Okay, interesting. I'll take a look at crude in a second. Here's copper. Yeah, I think we've got relative risk on today based on what we're seeing across the board. I don't think it's going to be crazy risk on, but I think the safest bet is just waiting for, some of the metals or even the indices. They'll give us some good buys into congestion support levels as we just patiently wait. So let's look at platinum. Crude. Even you're looking at 17,580 for the NASDAQ. Yeah, I'll take a look at that in a sec. So here's crude. I mean, this is kind of interesting. I don't think it could be an exhaust for a reversal back down here on crude. It really could be, but the way it got picked up there, I don't trust shorting crude right here. I really don't. And I'll tell you why. The rest of the board is relatively risk on right now, so I would not short crude here. I wouldn't go long either, but 99% of the battle is filtering out shit trades, and I wouldn't. That looks like a risky trade to me. Let's just look at the NASDAQ again here. So the NASDAQ's kind of the laggard. Yeah, I mean, NASDAQ would be a beautiful setup. You can already see it. It's kind of trending down here. So this is how I like to plan these. Let's say that NASDAQ, you know, I'm not going to do anything this hour, but let's say it sets up a nice little exhaust down here, right? Well, if we exhaust down here, we've got our key daily support level as we approach 17.6 or lower. And if we were, these are the divergences you want to find. If NASDAQ spikes down, but bonds stay elevated, rates stay lower, euro stays against, into the 108.70s against the dollar. Those are the types of trades that I just wait for, because when they come, they're just so nice. So the NASDAQ, I would love it to flush down there, as you mentioned, Steve. And I'm going to be happy to feel better. The Dow is just off to the races, so that'll probably lift copper and platinum. Okay, it is platinum that's used in catalytic converters, right? It's not it's palladium too. I always mix those up. Anyways, we trade the platinum. Here's the Russell. Yeah, I think the prognosis for a choppy day is what we're going to see with a slight risk on bias. So now the name of the game for the rest of the day, well, we've got consumer confidence coming out here in 20 seconds or something. So let's see, that'll rock the market. Let's go look at the, that could be a news play. Let's look at ES for consumer confidence. We might be able to sneak into a good position. So heading into consumer well, the bonds are always the good ones on consumer confidence. Let's go back to the ultras. Here's the ultra bonds. All right, so there's consumer confidence. Here's the ultra bond, you guys. Look at that. You see the ultra bond just tanking. See, so this can just change the whole landscape depending on how this number comes out, what happens to bonds, what that does to stocks. This is why it's just so good to let the scoreboard and OMA dictate what we want. I mean, I can tell you what, man, on the ultra bonds, if we were lucky to get back down to 126.30, I mean, we got a lot of beautiful support there. 126.30 on the ultras down in here. I do like that level. I think I'm gonna have to bring this up. Yeah. Bring up UBH. Ultra. We're just going to watch the ultra bonds here heading into the, because we just had that announcement. Everything looks pretty bullish overall. If bonds were to dump down here, which for the ultra bonds on the back of a news announcement, sometimes you can see these types of snaps. It'll just snap. And I'm definitely interested in this 126, 30 level down here. 126, yeah. Keep an eye on ultra bonds here. Let you guys know if I do anything. Bonds dropping, rates rising. Right now, that means a strong consumer confidence number came out. Check the dollar. The dollar is at, I got my snot rag, you guys. Very professional. Oh, dollar's catching a bid here, guys. But I don't think that matters because the charts look pretty darn bullish. But this is kind of the day we expected, right? Choppy. So ES is pulling back a little bit. I want to keep an eye here on the bonds. Because ultimately, I think the day is going to end with bonds, bid, rates kind of reasonable. Euro stronger against the dollar. Stocks, I think, are still going to be stable for the day. I don't see like a catastrophic sell-off here in bonds today. So that's why this level looks like pretty good support down into the low 127s. Down right into this level here. I would prefer it if we had, some more OMA trend lines down there. All right, so Let's see if we'll just keep an eye on this. We got ES trading at 49.48. Dollars at 108.63, so stabilizing against the euro here. I should say the euro stabilizing against the dollar. See what gold and silver did on the back of that consumer confidence. That's a gold so far. You see, gold's the kind of thing where, you know, we could see a pullback. For example, if we had a pullback on gold down into this, you know, 2052 level, I wouldn't buy it intra-bar, but at the 11 o'clock, I mean, you guys, just mark that down on gold, okay? If you're watching this, you can thank me later. 2052, 2051, 20, right in there. You got weekly VWAP. You've got monthly point of control. You've got December's monthly VWAP. And you've got January's monthly VWAP. All right into 2051. That's going to be a lot of support. And you can see it already was here. If we come back down to retest that, I don't think we're just going to go barreling through it. That was why yesterday I called out that long on silver in the members area. I said, hey, it's not a bad place to go long silver here at 2104, because here we smashed through all that support at 2304. But as soon as we recovered, it looked for sure like we were just going to do this, and we did. I wish I should have taken that, but you know, whatever. Woulda, coulda, shoulda. Here's silver. Yeah, you can see silver pulling back. I would love silver to pull back to 2305. It's the thing. You look at your levels where you just say to yourself, my God, I would love it if, you know, silver got to this level or bond. And then you just wait. And then when it gets to that level, you go, oh, this is great. Like yesterday, that trade for me that I was stalking was ES right into that, you know, 49.15 level. It was really 49.10-ish, but here, when I could see that we were here in hourly congestion, I could see we weren't probably going to go down here. So then boom, like there's your trade. Like those are the ones. You guys get one of those a day, and it's a wonderful life, as they say. So yeah, we're getting a little bit of a sell-off in indices here, which is nice. What do you think, Steve? It's kind of turning out to be the day we prescribed. Let's go back and check in bonds. Oh, bonds are 127.5. Nice. I'm not just going to buy bonds, guys. I mean, I guess the area I'm going to wait. We're not doing anything because, you know, we don't really have any hourly support to lean against. We do have weekly VWAP down there at 126.30, but that's pretty meaningless without OMA levels to confirm it. So let's just see how that. This would be good. No harm, no foul. We're just gonna let this market digest this number. Let's read what Zero Hedge has to say about the number. Check the number. They don't have anything yet. So actual. Yeah, I don't know. So it was forecast 115. It came in, you know, basically right in line with forecast. So I don't know why the market's doing this. I guess who cares? The market does what it does. All right. At least today we got some good volatility. We're getting some good reads. I think we just stay patient. Stay patient. We can just wait for our setups to come. So ES, checking with ES here. 49.49. Not surprising. See that support. But I'm going to wait because, you know, this is just where basic OMA comes in. You know, you've got the hourlies in congestion here, right? So you don't want to buy in the middle of the zone. Want to wait. NASDAQ. There you go. You see the NASDAQ kind of spike down into that level. 17,580. Yeah. Yeah, that's a nice level. Right there, we just tagged weekly VWAP on the NASDAQ. So that might be, you know, we'll see where the 11 o'clock hourly close happens. But this might be setting up a buy, depending where it closes. But if it closes like that, it could be setting up a buy like this for the NASDAQ. Wait and see. So it's 160 one-time fee. I missed that, Steve. Do they still have the one-time fee? Is it 105 or 160? Is that how they did it now? I wonder how long they can be around with these kind of payouts. I mean, because it works in the beginning when you get a lot of fresh blood coming in, losing a bunch of challenges. They're paying out the winners with those losses. But the Ponzi schemes don't work after a while, because after all that fresh blood keeps losing on the challenges, they eventually realize, like, fuck, I can't trade, and they stop. And then there's no new money coming in. Whereas the people who figure out how to pass those challenges, they're going to keep making more and more. Who's going to pay for the, right? That makes sense to you, Steve? Yeah, you watching ES? Yeah, me too. Bonds are stabilizing. I'm not going to make any decisions now until the 11 o'clock hourly close. Here's Ethereum coin. Cryptos are a mess. Euro US. Got a lot of support down in here on Euro US. I think the Euro will probably finish off the day stronger against the dollar. Nat gas. So Nat gas did get rejected up there. That's why I stay away from Nat gas. It's just a wild, I don't know. I don't feel like I have a great, of course, like swing trading Nat gas, but it's just kind of one of those markets where, like, why bother? So here's crude. This is tough to read if it's gonna reverse or keep heading higher. It's really tough with crude. Platinum. So platinum. Yeah, heading down, but I don't really feel like I missed anything there in platinum. Copper. Copper's kind of a mess today. So silver, this is good. Silver's back to 23.22, which is fantastic. So choppy day though, right? You see, if you don't know how to navigate this, very easy to lose money. This is why I'm being patient today. So silver, I would just like to wait on. I mean, you got a lot of support here temporarily, but I'm gonna wait. Look at gold. I think it's gonna be interesting to see what happens with gold and bonds, because gold looks like kind of what it did yesterday here. You see this? Look at this. You see here yesterday, you had that big spike up in gold, and then boom, it flushed down, and then just kind of recovered the rest of the day. I think you're seeing something similar here. See, spike up, exhaust down, and then maybe some sort of recovery the rest of the day. Because you got all that support into 2051 for gold. So we'll keep an eye on gold. It's not a, especially for challenges. I mean, probably a tough market to trade for challenges because it's so just, you know, just, I don't know. Silver is probably better, but we'll keep an eye on gold. I'll take a trade if I see a good one setting up. There's a lot of support down here, so I'm going to keep an eye on it. Sure. But I think I would like bonds better, especially for the challenge, Steve. Bonds are a good market to trade. Like if you catch bonds at the right spot, they typically don't go, like if you catch bonds at a good spot, they kind of just don't go against you the same way. So the trailing effect, generally is going to be more favorable on bonds. Look at UB. DB. Yeah, 105 or 160. Okay, thanks, Steve. Sorry, I'm a little slow checking the chat today because I'm still so tired. But I am feeling a little better from the med. Awesome. So here's ZB. Tricky day. We're navigating it well. That's the key. You see anything else, Steve, that you like that I'm not covering? Keep our eye on the bonds here. I like, you got the daily true average here on ultra bonds into. But it's tough now. If we're going to be coming out of that resistance, this is tricky. We'll navigate this carefully. Continue to wait. After going through like 6 rolls of toilet paper, I was like, fuck it. Blowing my nose. Dirty. Coming down, yeah. All right. Yeah, so I think we're just going to stay nice and patient. Let's see if zero hedge. Anything here. Not that I can see yet. I mean, we had the JOLTS job openings at 10 as well. Maybe that's what moved the market. The job openings were 9 million against the forecast, but that was also pretty much in line. Got the Dallas Fed Services Index at 1030. We got crude oil. That's coming in at 1630, so 4:30 p.m. That's a weird time for the crude oil number. Fascinating. Refreshing the news here. So conference board confidence revised lower for 3rd straight month. So you got to look at the revisions and all this stuff. The U.S. consumer confidence soared higher in January. Okay, that's what we thought based on the initial reaction. The headline was up from 108, revised down to 114. A huge surge in the present situation. Okay, so there was a huge surge in some hidden number, which is why you're seeing bonds tank and rates rise and stocks are probably dropping as well. But the conference board revised consumer confidence data significantly lower, so you've got like a mixed bag here. So I think this is sort of like the initial, selling the news, but probably going to be. I think these markets will stabilize overall. Just reading, catching up here. So that's pretty interesting. All right, so got a lot of support here at 24 for the bonds. actually down into anywhere from 20 to 24. Keep an eye on that. Take a look at stocks. Yeah, see this is also interesting, right? Because you got, after that hawkish number that just came out from the conference board, consumer confidence, bonds are tanking, right? Meaning rates are temporarily backing up, right? Meaning, stocks should follow to the downside, right? But they're not. So in this particular case, I think you have the tail wagging the dog, where I don't think stocks are going to follow lower today. So I think bonds are going to rebound. So we'll wait and see if we can catch a good potential long on bonds or gold. Gold's also heading down into a good area. Or the NASDAQ. I'm interested in the NASDAQ. It almost got to our level, kind of down here around 17.6, but it's at least getting closer to where we expect a lot of daily support. Look at the 30-year treasury. Yeah, so this is the 30-year. I think with the dollar, right? Well, you see, so this is why gold and silver are taking a big hit right now, is because the euro futures against the dollar was up to 108.75. We're back down to 108.52 here, you see? We were up here, now we're down here. But I think we are going to stay in congestion. I do feel the euro will rebound back up here, and that could also help gold and silver stabilize, and rates, bonds go up, rates come down. So, starting to put the picture together here. And you just wait. It's kind of like just, using OMA. Here's crude oil. Using all the different levels, using the different asset correlations, and you wait till they all, everything just looks good, and boom, those are the trades you take. And then you don't force the issue in between. So crude now, and now it's coming off out of that resistance level, but I still, I don't feel like I need to short crude here. There are better trades. Platinum dropping nicely on the back of that dollar strength. Copper, yeah, you see, copper is just kind of staying elevated because the indices are staying elevated. So even though you got platinum selling off and gold and silver are selling off right now, copper, if you're going to go short copper, you want to short copper when the indices look weak and when bonds are tanking and rates are rising, and also if you have a strong dollar as well. But you see how the different asset classes connect to each other in different situations. Let's look at silver. Yeah, so silver, you've got a lot of support down there into just below 23. If you look at the daily here, they see here, silver's trending up. So 22.95. Kind of yesterday how we had that big flush on silver here. Right here. And then I posted in the members area when we got done streaming, hey, this is probably going to be a good buy right here at 23.04 because we recovered that level. So I'd be looking for something similar in silver today, especially if the euro rebounds against the dollar, and depending where bonds stabilize. So, but look, guys, at the beginning of the day, what do we say? We forecasted it's going to be a very choppy day. Be careful. And so far, that's why we have no trades. It's a very choppy day. We're being careful. And you always got to be careful the day before the Fed announcement, right? And so we're patiently waiting for good setups. Right now, the correlations are mixed. So to stay out and just keep your powder dry until the clean setups are there, right? That's why on that challenge account yesterday, waited for ES to pull back. That was the one trade. $1,800 on 7 contracts. Just boom. Those are the ones we want. And they come plenty if you just wait for them. Let's look right now. I mean, you can see everything else is dropping, but indices are not. So that's why I think everything else is going to rebound. I think bonds are going to stabilize. Gold, silver will probably stabilize. But it's going to depend on the dollar. I mean, we need to hold this 108.50 level for the euro futures. Right now, we're looking at the ultra bonds. This is why you guys gotta Got to be careful. A little under the weather today, a little tired. It's going to be nice to be done with COVID and feel better, have more energy. But we're trading through it and trading through it profitably. Having a great couple of weeks. Start to the stream, up a lot. I think only, what, Steve, one red day in 3 weeks or something? Something like that. On flat days, but that's just because we don't take trades on shitty days. That's what I like to focus on, is risk management first and foremost. All right, so here's gold. We got, I mean, guys, right here on gold, this 2050 level, you've got monthly VWAP, you've got the monthly VWAP from December, you got the monthly point of control from this month, you've got weekly VWAP. I mean, you've got an enormous amount of, you know, support right here. So it's going to be a key level. But looking at the daily, whoo, I mean, this is, look at this, guys. The daily gold chart. This is why I love looking at all the different markets, because you can just get such a good idea of, like, one market will tell you something, but then you look at another market and go, oh my God, like, no. Like right here, this reversal in gold. I mean, this is the fact that we're all the way back down here. I don't think you want to be looking at this going, yeah, you know, I'm going to buy here thinking this is going back up here. No. Even though we are at all this support, you know, for gold that I just mentioned, not really a support level that I'd be willing to bet on right at this moment based on this, you know, huge reversal we're seeing here on the daily. Look at that. I mean, that's, so a lot of people got trapped up there. I think that was kind of the level we called out, right, Steve, at the beginning of the day. I said, once we get up into that 2070 level, you've got a lot of resistance getting close to 2070. No, I didn't short it, but I knew not to go long. Look at CES is holding up for now. No news coming out at, well, we got the Dallas Fed Services Index at 10:30, so that might do something. But right now the market's still digesting the consumer, the conference board consumer number, which was a little hawkish. You can see what we forecast to start the day, just chop, chop, chop. Not a good day to take a huge amount of risk. Yeah, I think it's good to just continue to be patient here, guys. There's NASDAQ. Gonna be fun seeing. I always check in on the other channels just because, of course, I'm curious how other people trade, and always fun to see how people do every day. One guy in particular, I'm really interested in seeing how he did today after his pretty big losses. Nice guy. I don't want him to lose, but dangerous trading. It's like Top Gun, dangerous. Is that what you guys are probably too young, right? You remember Top Gun, Steve? You're my age, or you're a little, yeah, we're the same age basically. I mean, remember when Iceman, he's like, I don't like you, you're dangerous. That's how I feel about all the other traders on YouTube. I'm like, you guys are dangerous. That's why here we try not to be dangerous and wait for our spots. As the stream grows, to make it a little more entertaining, we can get like some dancing, you know, like some flamenco dancers or something, some girls like, you know, doing Brazilian dancing, because, you know, I gotta analyze and trade and make a living and be patient and wait. So it's not the most entertaining thing in the world, but we can get some flamenco dancers at some point. Oh, you played the Nintendo game. Yeah. Yeah, that was a good movie. All right, so yes, here, look, just not a whole lot. So I think the kicker, guys, for the day, see, this is how we understand what's going to happen. Right now, you've got a lot of confusion that you're seeing across the different asset classes, stocks, bonds, metals. You know, the reason for this is because the current consumer number out of the conference board that came out was hawkish, right? Consumers were feeling, oh, good, right? So that's hawkish. Bonds go down, rates go up, Fed's going to stay higher for longer. That's why the market's reacting like this. But the last 3 months were revised lower, right? So that's dovish, right? So the market is being pulled between these two counter forces, and we need to see who wins after that information is digested. And we're going to know that by looking at bonds and the dollar, right? They're going to tell us. And then also the metals, of course. And then that'll tell us, what indices are most likely to do. So if we look right now at the dollar, you look at the euro futures here, you're right at weekly VWAP here at 108.48, right down in here. Hourly's in congestion here, right? 4 hourly's kind of grinding, trending higher. So I would say, as long as this 108.50 level holds and the euro can stabilize and start rounding up a little higher, the dollar doesn't look like it's going to go on a major tear today, right? So what does that tell us? Well, no crazy flight to safety, which is more risk positive, right? So we look at that, and then we go ahead and we say, okay, well, what is the 10-year Treasury note telling us, right? Because we want to know what are rates telling us. Well, the 10-year, what's interesting about this is that this is the 4 hourly chart. You do have a lot of daily support here, right? So you got the 4 hour there, you got the daily here. So 4 hour over here, daily I just brought in. So you guys see here on the daily chart for the 10-year note, using OMA, just look at all this support coming in right here. Now, I wouldn't be surprised that if the 10-year comes down and tags this level at 111.10-ish, which is just below where we are now, that's where the support would come in, potentially. And then you'd see this daily bar, right? It's coming down like this. Right now you see there's the close. But if we pick up support there, it'll push back up, which means rates will come back off, which means if rates come back off and the dollar starts to lose some ground back against the euro, and that tells us, right, that we can maybe look to get long, maybe bonds, certainly indices. They would be like my top pick. Gold, that outside reversal we're seeing in gold, I would stay away from gold right now. Not a good situation. So, but this is how we basically set it up. So with the ES here, oh, my lovely wife is here. Hello, lovely wife. What are you getting? Oh, you need the charger. Give me 1 second, guys. Alrighty. So basically, I think with indices here, this is the same thing yesterday, right? Like, I didn't have a trade until 11 a.m. when that E-mini S&P 500 long set up, and that was the trade. And it was a great trade, and did very well with it, right? So now today, the question is, I think ES is going to probably be range bound the rest of the day, and the question is, are the lows in? To be honest, I'm pretty surprised to see it holding up as well as it is right now, with rates pushing higher when bonds are dropping, the dollar's getting stronger. So what I would like to see, we still have 29 minutes left until the hourly check. And, I use the hourly charts because they give me time to connect all these asset correlations and plan my trades hour by hour. That's why we have, a good hit rate. So I would like to see this hourly chart here, this bar on ES, if we were to spike down in here and get some sort of an hourly exhaust, you're still in congestion here. And then you're closer to the daily support level down here, that if we saw ES down there and we saw bonds stabilizing, pushing higher, rates coming off, the euro getting stronger against the dollar again, that would be a great setup to buy, ES, because I would expect it to stay in congestion the rest of the day as we await out the Fed. This is how we plan it. Now, are we going to get down there? Maybe we won't. Maybe instead it's going to set up a buy here. But I wouldn't buy in here because we're in the middle of the range. I don't buy in the middle of the range. So this is how we wait for our trades. That's where we're at. Let's take 15. I need a break, and we'll reconvene before, in about 15 minutes. We got a quarter till the 11 o'clock hour, and we'll see if there's a trade that sets up. Steve, what chart do you want me to leave up for you? Do you have one in particular? I'm pretty interested in bonds. You want silver? Okay, we'll put silver. Now, silver's a good one to watch. Wow, we're 2307. Yeah, that's an interesting level down there. Look right there, Steve. 2295. That's also where you got that daily trend line coming in right inside the live pocket. So you got a lot down there to watch. Okay, I'll leave silver up for you, my friend, and I will be back in about 15 minutes. All right. Back. Nice. All right, let's do our check for the 11 o'clock hour. Starting with ES. We said coming into the day, it's going to be a choppy day, pre-Fed meeting tomorrow. So far, that is what's happening. Good day to be patient, conserve capital. Don't dig a hole that you've got to later get yourself out of, because that's not fun. All right, so here's ES. Kind of what we've been waiting for is a move back down into support. The question is, how low are we going to go? And the answer to that is going to depend on bonds, right? So ES and NQ, what will determine if we like longing from these support levels is what bonds and the dollar are doing. So right off the top, I can see that the Euro futures are at 108.63, which is good. They're off those lows at 108.50, right? So a little bit more risk on with the Euro clawing some back there against the dollar. Ultra bonds are at 127.1, so that's pretty weak there for the bonds. So rates increasing. That's a bit of a mixed bag, right? You got the Euro clawing back a little bit against the dollar, but you've got bonds potentially now going to close on their hourly lows, depending where they close, which means, you know, high rates on the back of that consumer board, consumer confidence number. And that could mean that stocks, you know, because I've got two key support levels I'm watching for stocks today, right? Based on the daily and the weekly charts. If bonds are going to continue heading lower, that means upward pressure on rates. That means stocks are more likely to go to the lower support level, which they're not at yet, but we're going to check that in just a moment. So this is just how you do the analysis to make sure you stay out of trouble. Let's go ahead and look at gold. You've got a lot of support here. You got monthly VWAP. You got December monthly VWAP. You've got weekly VWAP. You've got monthly point of control. You got a lot of stuff coming in here at 2050. You know, the question is, would I buy gold right here, right now? No. And the reason is, look at the daily here. You know, and you've taken out all that inventory up there, and now you're reversing back down out of it. Sure, it might stabilize here, but I think we're, you know, more so setting up, you know, getting ready to roll over here, putting in very strong higher time period resistance levels. So be careful on gold, especially with bonds dropping and rates increasing, right? This is how we narrow down the board here. Let's look at silver. So with silver, silver looks a little stronger than gold today. You've got more support down in here at that 20, we call 2308 at the start of the day. Probably the low of this bar here. Yeah, right in there. And that's only because monthly VWAP is coming in there. And monthly VWAP was super strong resistance for, you know, a while. And we finally broke through that. And now it's strong support. You know, the question is, again, do you want to buy silver or gold when bonds are heading lower, rates are rising, and the dollar is still kind of strong against the euro? No, you don't. Oh, geez. Nice when this COVID is over, you guys. Whew. But we're pounding through here, doing our best. Okay, so with the euro against the dollar, what we can see is that we're stuck in this range, and bonds are the key. So the 10-year is really what we got to focus on, because what we laid out earlier when we looked at the 10-year, this is the 10-year now, right? But this is the key level here on the 10-year, and this is going to be more so the driver of the indices as opposed to the ultra bonds or the 30-year. But I can already see on the DOM right here, you can see on Quant Tower, the ultra bonds are up there right now. We're breaking 127, right? So with the 10-year here, this is, you know, this is a key support level. You've got, I mean, all this stuff coming in here, all this OMA support right in here at 111.11. So this is the key level. If the 10-year can stabilize here and rates can push, you know, if rates can push a little lower because of 10-year stabilizing, then I think that, you know, metals will stabilize as well. But it's really going to hinge on this. And the good news is we've got this nice extension on the 4-hour backing up that support level there. So, and you are at the lower end of monthly value. You do have a lot of support down here on the 10-year. Go ahead and cycle through again. And Steve says, yeah, it's getting close. We'll see if we can set up some support there and if bonds can correlate. Yeah, exactly. All right. I just have a feeling looking at bonds and looking at just what metals are doing, it's telling me more so that, you see, this is, this is ES right now. I don't trust this support level here at 49.40 for ES based on what bonds are doing right now. I just don't. Right? I think we're more likely to head deeper down in here with bonds. Look, so at this exact moment, for example, this is how it can switch throughout the day. If the 10-year was to break that key support level, the 30-year, the ultra bonds, they start breaking lower. That means rates are now pushing higher and going to stay higher for the day. And if the dollar really pulls back and gets stronger against the euro, now all of a sudden you flip and you start looking for shorts on the indices, right? So got to be careful shorting against that weekly trend run, but you still have what could be a strong daily resistance pattern here. And if the scoreboard was confirming it, you can short with more confidence. Right now, it still remains to be seen, and this is why we have such a good risk management here on this channel. It's because I take trades on the asset class where the other asset classes are supporting that thesis, and then it's all lining up with the Owings market analysis levels. Very, very important. Put all those things together, use the volume profile a little bit, you get yourself some high probability trades again and again and again. The hard part for those who aren't used to waiting is that you have to have patience. It's a lot more fun for a lot of people to run around like chickens with their heads cut off and just, especially with the challenges, just trade, just lose a bunch of money. We are trading some challenges for fun, but we're going to trade them, patiently and aggressively, big contracts, but want to make good decisions. And we knew coming into the day, again, I'm going to keep repeating it. I repeat these things, guys, not to sound like a broken record to you. I always have this when I'm trading by myself. Before I started streaming, and I've been trading for a long time, I have this, thought process going on in my head all day, every day when I'm trading. I'm constantly reminding myself, right? I'm making notes. I don't make as many notes now because I'm streaming, but when I'm by myself, I'll make notes throughout the day as these different situations are unfolding. Right now, since I don't make notes and I'm streaming to you guys, I'm constantly repeating stuff because I'm reminding myself, like, okay, rates are doing this, dollars doing this. It's like Rain Man, right? It's, Rain Man's like, uh-oh, rates are rising, then you got to be careful, right? Now, Steve, were you allowed to see Rain Man? That was a great movie. One of my favorite movies of all time. And the younger people, if you guys are here watching and you haven't seen Rain Man with Dustin Hoffman and Tom Cruise, go watch that movie. It's so good. Classic. And they count cards in that movie, so kind of learn a little bit about trading and probabilities. So that's why, you use these things together. So right now, for example, you guys just watch, right? The 30-year and the ultra bonds are at 127, right? The 10 years at 111.12. The dollar is, back around 108.50, the euro 108.55. So based on that scoreboard that I see right now, right? I call the scoreboard, it's the all the different markets we're following, right? All the futures markets. That's the scoreboard. Based on that, I'm looking at this support level here on ES, for example. You got some support here, right? The hourlies in congestion. I'm looking at the scoreboard going, okay, would I buy this here? No, I wouldn't buy it because the scoreboard is not supporting that thesis. And if you learn how to trade like this, it keeps you out of a lot of trouble. Is it perfect? No, nothing is. But man, it will really keep you on the right side of things most of the time. And that's not to say that this won't go up. Maybe it will. We're just looking for the higher probability setups. The higher probability setups, for longing indices right here, I would have wanted to see much more support come in on bonds, hold them up, drive rates down. I would want to see the euro, back into the high 108.60s against the dollar. It's not. It just tells me there could be a bit more downward risk off pressure on stocks before we finally stabilize and round the bend. So I want to try and pick stocks in the zone of support that I think is going to hold. And right here, this is not that level. You say, okay, well, if you don't want to buy it here, certainly you want to sell it. No, because this could do anything. That's the whole point. We're waiting for everything to match up, and then that's the trade that we take. That's what's super important. Now you watched it when you got older? Okay, good, Steve. That's good to hear. Did you like it? I like that movie. Let's look at the NASDAQ real quick. So with the NASDAQ here, look, we're firing down. We're kind of getting closer. We got a lot. I think the NASDAQ, just like I said at the beginning of the day, choppy day, careful, Fed tomorrow. You know, we're seeing this. We're doing, and people think, you know, being flat in trading is not, it's not like a non-decision, right? It takes a lot of work to analyze and know when not to trade. People just like, it takes a while for people to learn that in the trading career. Here with the NASDAQ, we called at the beginning of the day that we're probably going to head down. Is the daily chart. We're probably heading down in here, 17,560. That's kind of my area. I could see us heading down here and then probably stabilizing like something like this. Head down, find some support, stabilize, and close the day, you know, maybe close the day back up right around where we are now. So that would be the move where I would want to buy down here. So I could write it back up to there. Because that's also when bonds would stabilize, rates would come off a bit, the euro would probably be making progress against the dollar. Those are the setups you want to wait for. So it's really good at knowing where not to take trades, right? Because a lot of people too, like with the indices, like, oh, they're going down. Well, oh, that hourly sucking up off the low. We should buy it. Like, I'm not going to buy it. We'll see what happens. Let's look at the Dow. I think the indices want to go a little lower. I really do. Let's just see how that plays out. My thesis right now. Russell's certainly leading us lower. Let's look at ultra bonds. You know, you've got some support here in the ultras, but I don't trust this based on what I'm seeing right now. I think they want to go lower. Let's look at gold. I think gold is going to be very choppy right now with what bonds and the dollar are doing. So even though you're at that support level, all that VWAP for the monthly, point of control, all that stuff, it's not an area I would bet on. Silver. So here's silver. Same with silver. Do some support here. Let's see, copper. It came into today, guys, just telling you guys, be careful. It's a good day to stay patient. If you see anything really good, we're going to take it for sure, but just not going to force the issue. Platinum. Get crude. See, look at this chop here, you know, just a lot of chop. So crude did stabilize earlier. We said, hey, you know, it was looking like it could have been on its way all the way down to 74.80, which was our level where we were interested in longing, but it turned around earlier and broke the resistance level that we knew had to hold if it was going to continue lower. So that's how we just stay out of it, right? You don't have to have a crystal ball. You just have to have ongoing thesis of what you think is going to happen. And then just keep watching the scoreboard, keep watching OMA, the key levels. And when everything, it's like the gears in a watch. When it all lines up, those are the trades you take. So we just hit 11 o'clock. And I don't see anything that I want to trade right now at 11. Just like yesterday, I got off the stream early because I was sick. And then the trade I took on ES, which you can see on the challenge account here, the $1,800 or $1,725 I made. I took that at 11 when the challenge was over because that's when the trade triggered. So I can't control when the trades actually trigger. I watch this when I'm done streaming. But here you see there's certainly some support here. I mean, you have some support here. It's not a bad place, but I'm just not going to bet on it. That's the way I'm trying to like let you guys know so you can try and learn from this and think like this. It's like the best thing you can do for your trading career, if you ever want to have one, is you got to be okay not being in trades. Got to really be okay just watching thousands and thousands of mediocre trades go by without you, because those are the ones that paper cut you to death and just bleed mental capital and bleed your account capital. So just plan your trades, wait for your setups, and just don't worry about all the shit that happens in between when you're not in a trade. Super important. So with ES, there could be some support here, but I already have my reasons for why I'm not betting on it, and time will tell. I know from my experience, when I don't like a trade and I look back on it, more often than not, I made the right decision. Oh, sometimes it goes up without me. Fine, I don't care. this can do whatever it wants to do. So here's the NASDAQ here. Again, yeah, this might pop, but I still think we're nowhere near the support level I'd be interested in. So I'm going to kind of leave you guys with that. It's 11. I still have my COVID, but I did get on the meds today, the special meds. So I'm hoping that tonight I'll finally get a good night's sleep. I haven't had a good night's sleep in about a week, but we are still, you know, we're doing very well, consistent. We've had like one losing day in the last 2.5 weeks or something. I don't know. We're doing very well. We're consistent, and that's nothing new for me, because that's how I've been trading before I started streaming. But it's a new process for me to come online and share this with you guys and do it in front of the public. And so far, I'm, you know, very happy with the way it's going, and we're going to continue to do it. And I promise that I'm going to do this every single day, you know, for the year, unless I can't get out of bed or there's an emergency, or if I'm traveling or on a vacation or something. I'm going to be here for you guys. So we've been doing it through the COVID, and it's been awesome. So for those of you who are in the elite members area, I will continue to post there the rest of the day, because of course I will be watching the charts. I just won't be streaming, but I will, just like yesterday, I alerted you to go long silver, go long ES. Those are 2 great trades. I post those in the members area because I can't stream all day, right? So we're still following the markets. And for tomorrow, you guys, the Fed, you know, be careful the rest of the day. It's going to be choppy because the Fed is tomorrow. Tomorrow we do have the Fed, so I won't stream in the morning, because I've learned, like, everybody's waiting for the Fed, right? The algos are waiting for the Fed. The volume is drying. Don't piss your money away the day before the Fed or the morning before the Fed. Doesn't mean I won't take a trade today. If I see a good setup, I will take it, and I'll alert you guys in the members area. But if you don't see something you really like, don't force the issue. Save your money, because the market's gonna wait for the Fed, and you're gonna get a lot of information when the Fed comes out. I'm gonna stream tomorrow. Even though it's going to be late for me here in Sweden, the Fed comes out at 8 p.m. my time, because I'm 6 hours ahead of New York. So at 2 p.m. New York time is 8 p.m. my time. And then the big news will get going when Powell does his press conference at 2:30, which is 8:30 at night my time. But, you know, there can sometimes be some good action heading into the Fed. So we'll stream for the Fed tomorrow. There will be no morning stream, and I promise you that'll save you money. So I would strongly advise you to not trade the morning before the Fed, but, you know, do as you will. And appreciate you guys being here, and we'll be back at it tomorrow. So take care, and yeah, thanks again.